Hello, my dear CMA inter students. So I'm very much excited to release these super 50 questions on our paper, that is corporate accounting and audit. These 50 questions after analyzing past 10 examination papers. I think you are aware of already we released marathon related to paper number 10, which is available on YouTube channel of BCCA. So I'm very much confident that if you prepare at least these 50 questions and if you gone through this video properly from the beginning to end, definitely you will get minimum 45 to 50 out of 70 marks in descriptive part. Sir, what about MCQ? Very soon I will come up with the bullet MCQ, which consists of 210 MCQs. On that I will release again video on it. So please watch this entire video. Definitely it will help you a lot. And one more thing, this video duration might be around 6 hours. 6 hours is not a big thing to get 50 marks out of 70. Okay, all the best, good luck. Okay guys, so let's start our Super 50 with a beautiful question. Actually, this question is very much easy. This question is from a rights issue chapter. So actually, they're testing this question continuously. This question has been asked in December 2023 paper as well as June 2024. Unfortunately, they were not asked in recent June 2024. So, that's okay, fine. Let's start question number 2. This question is on rights issue. So, before entering into rights issue question, I want to tell you one thing. Since this is a Super 50 concept or Super 50 video, I'm not going to explain entire concept here. My focus is only on how to solve this problem. Sir, how to solve the problem without concept? Of course, you need a concept. For concept, you can go to my marathon. You can watch it on YouTube. It is available. Sir, my marathon is completed. I am ready with concept. So I am just waiting for Super 50 questions. Definitely, this will help you out. Okay? Yeah, without any further delay, let me start question number 2 from rights issue. Yeah. Tell me guys, what is the rights issue means? Rights issue means an existing company, if they want to go again for public issue, obviously they can go to public issue. That means they can offer their shares to new people which are not already there in their company. That means they are not their existing shareholders. Or they can offer the same shares to their existing shareholders. But the problem is, all existing shareholders might not interested again to purchase the shares of company. Or some shareholders are interested to purchase shares of company, but maybe funds are not available. So this is the practical problem when the company wants to issue their shares to their existing shareholders. Of course, many companies are interested to again issue their shares to their existing shareholders. But all time and all shareholders might not be interested to purchase again shares of the same company due to number of reasons. Here, my concept is, for example, we are Reliance Industries Limited. We have some 10 lakh shareholders. Our market price is, for example, say 50 or 60 rupees. We are offering to our existing shareholders, my dear shareholders, I want to again come for public issue. Actually, I offer to you at 60 rupees, then nobody will purchase your share. Sir, why sir? They can purchase the same share in their secondary market at 60 rupees, but you are offering it more than 60 or 70 or 80, definitely they will not accept. Okay, done. That means, if a company offers their shares at more than market price, definitely nobody will interested to purchase the shares of me. That is clear. Okay. Then Reliance company come up with another proposal. That proposal is, okay buddies, I'll give my share at 60 rupees, even though they will be not at all interested. Why sir? Even they can purchase the same share in the secondary market at 60 rupees. Why they have to purchase in your company? What is the specialty? What is the benefit they are getting? Definitely they will not interested in, of course. So the solution is, if the Reliance company come up with a new proposal that, my dear Reliance shareholders, you are my family, that's why I am giving you my share at 40 rupees, then definitely everybody will be interested to purchase the shares of company. Why? Because generally the mindset of shareholders is like, I can purchase the share of my company at 40 rupees. By tomorrow, I will sell this share at 60 rupees. Per share, I will get 20 rupees profit. He will calculate like this. If I purchase 10,000 shares, I will get 10,000 into 20, 2 lakh rupees profit within a single day. That's how generally shareholders will think. So, of course, there is a definitely benefit to the shareholders when a company is giving shares to their existing shareholders. Why? Because if the company wants to go for public issue to the outsiders, definitely they have to collect 60 or 70 rupees as per the requirement of the company. But if the company wants to issue to their existing shareholders, they can't ask 60 or 70, they have to give it 40 rupees. So that's why definitely existing shareholders will get benefited from that particular issue or particular scenario. This kind of situation is called rights issue. Sir, why we call it as a rights issue? Listen, even though Reliance company is offering to existing shareholders at 40 rupees, maybe all shareholders might not interested to purchase the shares of. So maybe all the shareholders might not financially well to purchase the shares of company. So definitely Reliance company cannot force all the shareholders, you have to purchase shares of my company. Definitely they can't do it. They can't, even though they can influence them, but they can't force them to purchase shares of Reliance company. So definitely we can't pressurize all the shareholders, you should purchase my shares. Definitely that is completely their discretion, their choice. So that is the reason Reliance company always gives freedom to the existing shareholders. I am giving this chance to you. If you want, you can purchase shares of my company. Otherwise, you can ignore. That means I am giving a right to you. What is that right? Right to purchase shares of company. Sir, I don't want, sir. You can be silent. No problem at all. Sir, I need, sir. You can purchase. You can exercise your right. I think you know the difference between rights and duties. Rights means that is your choice. You may exercise or you might not. Duty means that is your responsibility, you should do. Here, Reliance company is giving right to the purchase shares of company to existing shareholders. If they are interested to purchase shares of company, they can purchase, otherwise they can't. They can ignore, no problem at all. Okay? So this all is basics or background of rights issue. But coming to problematic part, very easy. We have only 3 formulas. If you know these 3 formulas, you can easily answer question from rights issue chapter. But happiest thing is, in our book, there is only one question. That means if you check BCCA book as well as your board book, we have only one problem. Actually, in BCCA book, we have added one more problem which is relevant for recent examination question. Okay? Yeah, that is fine, but both are almost same, just they exchanged the names and numbers. So, if you solved this question or practice this question, definitely you can answer any question if they ask it from rights issue chapter. So, there are only 3 formulas, you have to focus on it. Okay? Come on. First formula, theoretical market value. Sir, what is the meaning of theoretical market value? Theoretical market value means what would be my market value of share after rights issue. Generally, as per our example, I told you very clearly, market price is 60 rupees, rights issue offering price is 40 rupees. This 40 is called RIP. RIP means rest in visa, no, rights issue price. So rights issue price is 40, market price 60. Generally what people think, I will get 20 rupees profit. That is not at all correct. Why, sir? Definitely for 100% this is very clear and very correct. Whenever company is going for rights issue, after rights issue, if you take any company, whether that is Reliance company, Tata company, HCL, if you take any company, you can check all your past details. If you check any company, whoever went or going to what you call rights issue, definitely their post rights issue, after rights issue, their market price definitely it will get declined, it will be reduced. That is for 100% sure. You can check any company, you can Google it, no problem. So the summary is, after rights issue 100% Reliance company share will be reduced. So then definitely present market price 60 rupees, rights issue price 40. Maybe this price will be reduced to somewhere 55. That is okay, still we are getting 15 rupees profit. Don't worry, it will not reduce it less than rights issue price. We will get profit only, but not 20, we will get some 12 to 15 rupees. Okay? Yeah. So formula for theoretical market value equals to existing number of shares into current market price plus number of rights issue shares into RIP. RIP means rights issue price divided by total number of shares after rights issue. This is the formula for finding out theoretical market value. Second formula, value of right. Value of right equals to current market price minus theoretical market value. Third formula, percentage of changes in capital equals to old capital minus new capital by old capital into 100. These three formulas are enough to solve rights issue question. What are those three? Theoretical market value, value of right, percentage of change in capital. What is the formula for theoretical market value? Existing number of shares into current market price plus number of rights issue shares into RIP by total number of shares after rights issue. Second formula, value of right equals to current market price minus theoretical market value. Third formula, percentage of change in capital equals to old capital minus new capital by old capital into 100. Actually, even this is a very easy problem. People will feel difficulty because they are following some board book solution. That might be one of the reason. So don't worry, I am here. I will simplify this answer as much as possible. Okay, let's go to the question. I think you have this material. Okay, yeah, with this company your rights issue chapter preparation and revision should be completed. Okay, yeah. A company is planning to raise funds by making rights issue. So they are going for rights issue of equity shares to finance its an expansion. So they are going for expansion, so they need obviously funds. For funds they are coming to rights issue. Rights issue means they are giving their shares to their existing shareholders. The existing equity share capital of the company is 50 lakhs. 50 lakh is their existing, nothing but in our formula this is a old capital. The market value of share is 42 2 rupees. So let's write whatever they have given. The company offers to shareholders right to buy 2 shares at 11 each for every 5 shares. So let's write the given info, then it will be very easy to answer. So tell me one by one. They have given firstly old capital. How much? 50 lakhs. Next one, they have given current market price 42 rupees. They have given RIP, rights issue price, equals to I think 11 rupees. Yeah, 11 rupees. In rupees, you should write rupees symbol. They are telling us you should have some existing number of shares to get rights issue. That means existing number of shares you have equals to, you will have 5 shares, then you will get rights issue shares. So they are offering to you rights issue shares equals to 2 shares. So existing number of shares 5, rights issue shares is 2 shares. This is the question. So what is the requirement of the question? Theoretical market value and value of right, percentage of increase in capital, same as whatever we discussed. Okay, first one, theoretical market value. What is the formula for it? Already we recorded. Existing number of shares into current market price plus number of rights issue shares into rights issue price by total number of shares post rights issue. So just apply the formula. What is the existing number of shares we should have to get rights issue? We should have 5 shares. What is the current market price? Already we have 42 rupees plus rights issue shares 2 into RIP 11 by total shares means 5 plus 2, 7. Calculate it, give me answer. So give me answer. 5 into 42 plus 2 into 11, 232 by 7. Yeah, 33.14 rupees. What is this? This is the theoretical market value. Second one, value of right. What is the formula for value of right? Market value minus theoretical market value. What is the market value they have given? 42 minus, just now we got theoretical market value. So 42 minus 33.14 equals to 8.86 rupees is value of right. Third question they are asking, percentage of increase in capital. So very easy, sir. If they are asking increase in capital, so you have to write new capital minus old capital by old capital into 100. If they are asking decrease in capital, reverse, old capital minus new capital by old capital into 100. Okay, now? So we know old capital they have given 50 lakhs, but the requirement is new capital. How to get new capital? New capital means already we have old capital plus again we are issuing rights issue. How many shares we are going to issue on rights? So actually for 50 lakhs, I think face value is given, huh? Face value, yeah. If they are giving 11 rupees means the face value is 10 rupees. So number of existing shares are 5 lakh shares. For each 5 we are giving to no. That means we are going to issue 2 lakh shares on rights issue. So present face value 10 no. So total rights issue share value 20 lakhs. Already existing 50. So 50 lakh plus 20 lakh equals to 70 lakh on rights issue. Therefore, what is the answer for it? 70 lakh new capital, 50 lakh old capital by 50 lakh into 100. 70 minus 50 means 20 lakh by 50 lakh into 100 is nothing but 40%. Your answer is 10. Undoubtedly, you will get 7 out of 7 if they have asked the same question. Don't think anything else. Sir, can I get same full marks if I write in the same manner? Yes, you will get the full marks. It's already proved. My previous or old students, they have written the same format in their examination. So they got full 7 out of 7 marks. I verified their suggested answers. That's why I'm telling you this much confidently. Okay. So with this, your rights issue chapter preparation and revision should be completed. Okay. If you are unable to understand any point with those 3, and just go back and watch the same content again. Okay. So our agenda is, by the end of this Super 50 video, your preparation and revision should be completed in all aspects. Okay. Yeah. So I am very much happy. So we completed within 20 minutes one chapter successfully. Okay. Yeah. If they are asked this question in coming June or December examinations, you will get full marks. If they are not asking, then that's okay, no problem. Yeah. Subject is important, no? Yeah. Come on. Next. Next, question number 6. This question is from forfeiture of shares. Actually, I am going as per importance and simplicity. So again, they are asking continuously from this chapter for 7 marks. That too, they are asking as a question number 2B. Actually, I don't believe this 2A, 2B, 2C concept. Why? Because they can change 2B question from forfeiture to underwriting, or underwriting to some another chapter like banking, electricity. So I can't promise. Definitely 2B is from forfeiture, 2A is from rights issue, 5A is from banking. I can't. If they follow the same trend what their seniors follows, then we can expect the same trend. But if the examination paper setter is a new person who is completely a young person, or he may completely change the entire pattern. Okay. So I can't promise personally, but still okay, they are following the same tradition. But okay, but you don't follow that particular concept. Our concept is to get 70 marks or 80 marks in our paper. That's it. Okay. If they have asked for example, we know the forfeiture of shares very well. What is the problem if they asked as 2B or 2C or 2D? What is the problem? We need marks. Definitely we will get the marks. That is his discretion, his headache. He may give as 2B or 2C or 5A, 5B. Why are you bothering about question number? That is his headache. Leave them. Come on. Question number 6. Alpha Limited issued actually this question is a combination of issue of shares and forfeiture of shares. Issued prospectus inviting applications for 2,000 shares of 10 each at a premium of 2 per share, payable as follows. On application 2, allotment 5 including premium, on first call 3, on final call 2. Applications were received for 3,000 shares and pro rata allotment was made. I think you know what is the pro rata allotment, proportionate allotment. When the company received excess application, they'll go with the pro rata allotment. On the applications for 2,400 shares, it was decided to utilize the excess application money towards the amount due on allotment. So this is the first part. There will be second part is there. So first try to understand what is the given information. What is the given info? One company is there. They are going for public issue. They have issued how many shares? 2,000 shares. But how many applications we received? 3,000. So Number of shares issued equals to 2000. We can write number of shares subscribed. Subscribed means for how many shares public made an application, equals to 3000 shares. They are giving one sentence that we are going with pro rata for 2400 shares. That means out of this 3000, we have to divide into two categories. One category is 2400, second category is 600. For this 2400 category, they are going with pro rata. That means for this 2400 shares, they are giving 2000 shares. For the 600 shares, they are giving 0. That means they have to refund the entire money to these applicants. But here, no refund. Why no refund? They will use this excess money for allotment and calls. First, you have to understood this point. Okay? Sir, no sir, I am not getting all this content because I had no proper coaching. So I am just writing by using my CA inter knowledge or whatever it is. So better, if possible, listen all this Super 50 and Marathon and go for exam. If your exam is not clear, don't feel sad. It happens, no? So because you have not taken proper coaching, then better, believe me, you can purchase my classes on BCCA app. Definitely it will be worthy. Definitely it will be worthy. Okay? If you need my classes, you can directly, right now you can, comment in our comment section. Definitely our team will approach you. But one thing is for sure, you will be 100% satisfied after listening all my classes. Okay? Definitely you will be satisfied. That is for sure. No doubt in that. Even I will help you out during your preparation, or if you have any doubts, we have a separate Telegram group. You can come to there and you can ask any doubt. Yeah. Come back. So here we have to refund this applicant money. Here we will adjust their application money in future calls. So they are collecting application money 2 rupees, allotment 5, first call, second call, including premium. Premium how much? 2 rupees. That means it is 3 plus 2. Coming to second case, Mohit. There is a shareholder named Mohit, to whom 40 shares allotted, failed to pay allotment money. So he failed to pay allotment money, but unfortunately he is not paying allotment money. And on his subsequent failure to pay first call, his shares were forfeited. So there is a person called Mohit. He unable to pay, or he failed to pay allotment money and first call money. So the company finally forfeited his shares. Forfeited means cancelled. Jagat, another shareholder, he is holding 60 shares. Failed to pay 2 calls. That means he paid allotment money, application money. So he is unable to pay first call and second call. On his failure, his shares were forfeited. So here what happened? 2 persons are here. One person name is Mohit, second one is Jagat. Mohit failed to pay allotment money and first call money. His shares were forfeited. Jagat failed to pay first call and final call. His shares also forfeited. What is the difference between these two? Mohit's shares are forfeited after first call. Jagat's shares are forfeited after second call. Okay, that means at the time of calling second call, so Mohit is not a shareholder. Of these shares forfeited, 80 shares were reissued. Of course, company has right to reissue for 9 rupees. The whole of Mohit shares were being included. Okay, fine. Give necessary journal entries. Okay, no? Come on. What is the journal entries? As usual, while the receiving share application money, bank account debit to share application account. That is the first entry. Second entry, we are refunding some amount, no? Refunding how much? 6,000 into application money, 2 rupees. 6,000 into 600, sorry. 600 into 2, 1,200. What is the entry for refund? Reverse, share application to bank. What is the third entry? We are giving 2,000 shares, no? What is the journal entry? Share application account debit to share capital. Some amount will be transferred to share allotment. Next allotment due, first called everything you know. So directly I will move on to this particular Mohit and Jagat case. Okay, no? Or else I will write entries from first call, or else I need all entries. No need, no? So I will write entries from the first call. Okay, from I think allotment. From allotment I will write entries. Okay, yeah, come on. So what is the entry for share allotment due? Share allotment account debit to share capital. Of course we are issuing at premium, no? So we have to write to securities premium. So what about previous entries? You can write it, no? Application money received, refund, that's it. How much allotment? 2,000 shares into 5. How much capital? 2,000 into 3. How much premium? 2,000 into 2. This is due entry for allotment. Next, receipt entry. What is the entry for amount received? Bank account debit to share allotment account. Correct? But tell me, we are not going to receive entire amount. Why? Because some person is there, he is unable to pay. That is called calls in arrears. I remember the previous concept, calls in arrears. Calls in arrears means that is our asset or liability? Asset only. So in fact you have to tell me how much I am going to receive, because Mohit is there, no? How many shares Mohit? Mohit is holding 40 shares. That means what is the allotment money? 40 into allotment money 5, no? 200. Generally what people will think? So totally we have to receive 2,000 into 5. 2,000 into 5 means 10,000. 200 rupees is arrear. So we will receive 9,800. This is not a correct. We will not receive 9,800. Why? Because listen, already there is a pro rata allotment. That means for 2,400 applications we have given 2,000 shares. Here Mohit's allotted 40 shares. That means how many shares he applied for? How can we do it? 40 by 2,000 into 2,400. That means he applied for 48 shares, but we allotted only 40. That means already he paid extra money for 8 shares at the time of application, nothing but 16 rupees. So that means the only arrears is 184. So calls in arrears account debit 184 out of 2000. So 184 minus 2000, 2000 minus 184. So the balance amount is, in fact, out of this 2000 also already remaining people are there, no? So that means we will receive only out of this 10,000 already some excess money we received at the time of application, right? So how much money we have received at the time of application? For 400 shares. That means 400 into 2, 800. That means actually we have to receive only 9,800, not 10,000. 9,200. How we got 9,200? 10,000 minus already we received 800 at the time of application. Why? Because we have given on pro rata allotment. That means we received only 9016. Rest is very easy, sir. You can do it. Similar to Mohit Jagat case also. What is the entry for forfeiture? What is the entry for forfeiture? We have to cancel the capital, no? Share capital account debit. We have to cancel the premium also. Premium account debit. To call scenarios to forfeited shares account. Of course, this is a super 50 concept, no? So I can't discuss each and every point in detail manner. So please try to understand. So if you understood forfeiture of shares concept, okay. Still, if you have any doubts, you can go to my marathon. There will be clear discussion of concept. Okay. Here my focus is only on problematic part. Okay, no? Yeah. Next, underwriting. Actually, I am very much confident that they will test this question for your attempt. I am very much confident on it. I don't know why, because based upon past analysis might be. Come on. So, I don't want to discuss again what is underwriting, who are underwriters, what is the basic percentage. I don't discuss all those things directly. Let's enter into the problematic part. So, the following underwriting took place for P Limited, which invited applications for 10,000 shares of 10 rupees each. X 6,000 shares, Y 2,500, Z 1,500 shares. Actually, try to remember, my dear students, whenever if the question comes from underwriting, you have to check first and foremost thing is whether the given question is full underwriting or partial underwriting. That's what you should check very clearly. Check it out. 6,000 plus 2,500 plus 1,500 equals to 10,000. How many shares they have issued? So both are same. This is a full underwriting, because already you know the format or processing of answer is different when compared to full and partial. Okay. Second one, in addition, there were in a form underwriting is there. In this question we have form underwriting. Actually, you know what to do in the case of form underwriting. I have given a beautiful chart in my marathon. You can check it out. So X 800 shares, Y 300 shares, Z 1,000 shares. These all are form underwritings. Total subscriptions including form underwriting 7,100 shares, and the forms included the following marked applications. So you know what is the meaning of marked applications. So we have totally received 7,100 applications. Out of these, marked applications are there. How many marked application? 1,000 of X, 2,000 of Y, 500 of Z. That means totally 3,500 are marked applications. Okay, no? So at the same time, out of this 700, form underwriting also included. That means we have to reduce form underwriting also. How many form underwriting? 800 plus 300 plus 1,000. That means 2,100. So please tell me 7,100 minus 3,500 minus 2,100. Yes, 1,500 is called unmarked applications. Unmarked applications. Okay, this is the clarity, marked, unmarked and form underwriting. So you know the answer format is very clear. We have to write gross liability minus marked applications minus unmarked applications. You will get net liability, add form underwriting, total liability. Meanwhile, if you get surplus to any underwriter, you have to share to the remaining persons in their gross liability ratio. Correct? But the point is, it depends upon what about firm underwriting. If they are clearly mentioning firm underwriting are treated as a unmarked application or second marked applications. So you have to do very clearly based upon their requirement. Format is very clear. What is the first one? Let's do under point number 1, that is if form underwriting are unmarked. What is the treatment? Gross liability. What is the gross liability? Gross liability means number of shares guaranteed. How many shares guaranteed by X? 6,000. Y 2,500. Z 1,500. Gross liability is very easy. Just number of shares guaranteed. From that we have to reduce marked applications. How many marked applications they have given? No, 1,000, 2,000, 500. You will get 5,000, 500 and 1,000. Less we have to reduce unmarked application. Here you have to wait. Why? Because now they are telling us treat firm underwriting as a unmarked. That means you have to add these two. That means 3,600. Now unmarked applications are not 2,100. Now it is become 2,100 plus 1,500, 3,600. Now you have to share it to all underwriters in their gross liability ratio. What is the gross liability ratio? 60:25:15. That means 60:25:15 means I think 512, 55, 53. 12:5:3. Share it 3,600 into 12 by 5:3, no? 20. Correct. 2160, 900, 540. Unfortunately, what happened? Y got surplus. We have to share it to the remaining underwriters in their gross liability. What is their gross liability ratio? 12:3. What happened? 400 into 12 by 15. How much? Correct. We have to share 320, 80. Last law we have to add firm underwriting. We will get net liability. Nothing difficulty. Very, very easy. If they are telling us treat it as a marked application, then what to do? We have to add to the marked. So already we have marked, no, 1,000 plus 800. Now X marked are 1,800. Y marked are 2,300. Z marked are 1,500. Same. Gross liability minus marked minus unmarked. If you get surplus, share it. Net liability, add firm underwriting, total liability. Very easy question. Okay, na? Very, very easy question. I will tell you in a summary way what to do. What is the pro forma firstly for underwriting problem? Cross liability minus marked applications minus unmarked applications in which ratio? In their cross liability ratio. You will get net liability, add firm underwriting, you will get total liability. So for firm underwriting we have two treatments. One is add to net liability. Second one is if they are telling us treat it as a marked, we will add to the marked. Treat it as a unmarked, add it to the unmarked. Sometimes they will be silent, they will not say anything. Then in that case you have to write separately minus firm underwriting. Here same. Okay, no? Yeah. You have to follow. If they are given a statement that treat it as a marked, add to marked. If they are telling us treat it as a unmarked, add to unmarked. If nothing is given, treat separately. Okay, no? So recently, actually I am expecting question for June 2025 exams. Okay? December 2. This is all about underwriting. One more small question is there from underwriting. So, question number 12. D Limited issued 2,000 shares of 100 each, credited as fully paid to the promoters for their services, and issued 1,000 shares of 100 each credited to as fully paid to the underwriters for their underwriting services. Here what happened? Company has given shares to two people. One is promoters, second one is underwriters. Firstly, you have to understood what is the meaning of promoters, what is the meaning of underwriters. Promoters means the person who are involved in the incorporation of company. The person who incorporates the company, the person who starts the company are called promoters. Who are underwriters? Whenever the company is in a fear of not reaching that minimum subscription concept, that 90% concept, then they will reach underwriters to help them out to reach that minimum subscription. There is a very much gap or difference between these two words. So they are asking, what is the journal entry if company is giving shares to the promoters at free of cost, and what is the journal entry if company is giving shares to the underwriters at free of cost? Okay, let's check it out. For example, if a company is giving shares to their promoters at free of cost, tell me what is the involvement of promoters in a company. Obviously they are most important persons to the company, because without promoters there is no company at all. Okay, so whenever a company is giving shares to the promoters at free of cost, company has to assume that I am giving the shares to my promoter, my person, just like I will feel it as a goodwill, because my goodwill is my brand. I am giving my shares because he created goodwill. He created a company. So whenever a company is giving shares to their existing promoters, we have to write entry called goodwill account debit to share capital account. Why they have to debit goodwill? They feel it as a asset is created. What is that asset? Intangible asset named as goodwill. Why to credit share capital? Because they are giving shares to the promoters. We are issuing capital. Our capital is increasing. Whenever our capital is increasing, that means that is credit balance. We have to again credit the share capital. That is very easy when a company is giving shares to their existing promoters. That is okay. Then what about when a company is giving shares to underwriters? Actually, this is not related to underwriting. This is not about firm underwriting, not about marked, not about unmarked. They are giving shares to the underwriters as a commission. You know already, if a company is approaching any underwriter, definitely they will accept, they will ready to help the company to reach that 90% minimum subscription concept. But they are not ready to go for free service. Definitely they will expect some kind of commission called underwriting commission. Now the situation is, if they are paying commission in cash, that is okay, very easy. Cash account debit to commission in the point of company, they will write underwriter's account debit to cash or commission account debit to cash. That is easy. Now what happened in this question? Company is giving a commission to the underwriters in the form of shares. That means Reliance company is giving shares to their underwriters as a underwriting commission. That means instead of giving cash as a commission, company is giving shares as a commission. What is the entry for it? Common sense. What is entry for due? We have to pay commission. Now what is the due entry? That is an expenditure. Underwriting commission account debit to underwriters. That is due entry. That is due entry. Why should I debit underwriting commission? As per your rule number 3, debit all expenses and losses. That is my expenditure. That's why I debited. Why to credit underwriters? I have to pay to underwriters. That is my liability. My liability is getting increased. Now payment entry. If I pay cash, what is the entry? Underwriters account debit to share capital. But here what happened? I am not paying cash. Instead of I am giving my shares. What is the journal entry? Underwriter account debit to share capital. Very easy. Done. If you are lucky, they may test same question as a 3 to 4 marks question. You can easily answer it. Maybe some people might not answer this point. That means whenever company is giving shares to their promoters, what is the journal entry? Okay. So let me summarize it. Question number 12.
company is giving shares. Promoters, underwriters. If they are giving shares to their promoters, what is the journal entry? Just now we discussed now. Goodwill account debit to share capital account. That means goodwill is created. We are issuing shares. What is the entry if we are issuing shares to underwriters as a commission? As usual, we have to write firstly due entry. What is due entry? What is due entry? Tell me. Due entry, underwriting commission account debit to underwriters account. Whenever we are issuing shares, the entry would be underwriter account debit to share capital account. That's it, done. That's what they have tested in question number 12. Okay, I think now you understood what to do when the company is giving shares to the promoters or underwriters at free of cost or else as an underwriting commission. Okay, so with this we successfully concluded underwriting. Still, if you have any doubts in question number 11, please revise this question once again. So what is the format for finding net liability? Gross liability less marked applications less unmarked applications, you will get net liability. Net liability plus firm underwriting, total liability. Now the problem is, what is the treatment of firm underwriting? It is, for it we have a beautiful chart. If it is a marked applications, add to marked. If it is unmarked, add to unmarked. If nothing is given, treat it as a separately. At the same time, you have to add this firm underwriting to net liability to get total liability. Okay, no? So this is all about underwriting. Okay, next generally so many students, even still I'm getting messages from student community. Generally students ignore these 3 chapters: accounting for banking companies, accounting for electricity companies, accounting for insurance companies. So I don't know why students ignore these chapters and they'll took this chapter as a choice. In fact, for me and for my students, these 3 chapters are A+ category chapters. Why? Because you will get 16 marks in your main exam. 16 marks is not a joke. I will tell you how they will ask that 16 marks. They will give 2 7-mark questions plus 1 MCQ. 7 plus 7 plus 2. Please don't ignore these 3 chapters. Please. So I will start one by one chapter. First let me discuss banking, then electricity, then insurance. Okay, pay attention. So let's come to our material. Where is banking question? Yes, question number 17 is from accounting for banking companies. Okay, come on. So this question is on rebate on bill discounted.
Before answer this question, rebate on bill discounted, I will tell you what is the concept of rebate on bill discounted. To answer this question, definitely you should aware of bills of exchange concept. I think you know the bills of exchange concept. Okay. So in bills of exchange, we know calculation of due dates. How to find out due dates, sir? Finding out due dates is depend upon date of bill. For example, date of bill is somewhere 1st January 2025. Bill term is 3 months. Tell me due date. I think you know in bills of exchange we have to give 3 days as a grace days, correct? So 1/1/2025 to 3 months means 1/2/25, 1/3/25, 1/4/25. Actually 1/4/2025, April 1st is the normal due date, but we have to add 3 more days as a grace days. That means due date is 4th April 2025. But for example, if the question is 1/1/2025, term is imagine 45 days. Then we have to find out term in days. 1/1/2025 to 45 days. That means if you ignore first day, in January we will have 30 more days. Next in Feb we need 15 days. 30 plus 15, 45. So 15 days. That means 15th Feb is the due date. We have to give 3 more days as a grace. So 18th Feb 25 is the due date. So this basic knowledge of bills of exchange is required to solve the question of rebate on bill discounted. Okay, no? So generally, you know, whenever a bill is drawn, there is a 2 parties, drawer and drawee. Once the bill is accepted by drawee, again the bill will be received by the drawer from drawee. Once bill is received by the drawer, he has 3 options. Either he can hold till maturity, or else he can endorse, nothing but transfer, or he can discount the bill with banker. What is the meaning of discounting of bill with banker? For example, bill value is 10,000. I'm drawer, you are drawee. So now the bill is with me, but I need immediately some 10,000 rupees. So what is the solution for it? I can approach SBI. So I can approach SBI. So I can give, I have to give my bill to the SBI. Now SBI will give money to me. On due date, you are the drawee. You have to pay the money to SBI, not to me. You know the entry. For example, if you approach SBI, SBI will give only 9,000, not 10,000. The entry is bank account debit to bills receivable account, but bill amount is 10,000, but you received only 9,000. What about the rest 1,000? That 1,000 is lost to us, lost towards discount. That means the entry is bank account debit, discount account debit to bills receivable account. This is the journal entry in the books of drawer. That's what we know. Already we covered this chapter in our foundation level itself. At the same time, the same topic is covered in our group 1 financial accounting also. Okay. So now the point is, this entry is correct, 100% correct. I agree. But this entry is in the books of drawer. But as of now, I am discussing about accounting for the books of bank. So So I'm discussing about accounting for banking companies. Now tell me, if at the time of discounting of bill in the books of drawer, the entry is bank account debit, discount account debit, two bills receivable. My point is, what is the journal entry in the books of banker? So what is the journal entry in the books of SBI? You tell me, what is entry in the books of SBI? So just think, what is the entry in books of SBI? So assume you are a banker. What is entry in your books? That means you are receiving one bill and you are giving some amount. Let's continue same example. So you are receiving bill worth of 10,000. You are giving cash of 9,000. What is the entry for it? Come on. So you are giving cash, no? That is for sure we have to write to bank. How much? How much you are paying? 9,000. So you have to write to bank account 9,000. Next one, what is the debit item? Listen carefully. So we are receiving bill, no? So generally what you think? Debit what comes in, credit what goes out. In that manner, you have to debit bills receivable account, credit to bank account. Obviously, right? Yeah. So your entry would be normally as per your concern, bills receivable account debit to bank account. But this is not correct. Why? Because that particular draft or note you are receiving is not as bills receivable for banker. So for banker, that is just like a bill discounted. The entry would be bill discounted account debit to customer current account and to discount account. So that means the 10,000 would be discount for us. So if the 10,000 is discount to us, out for example, we received bill on imagine first what you call Jan. Bill term is imagine 5 months. That means 1st Jan to 1st June. So out of this 5 months, the bill is related 3 months related to current year, remaining 2 months is related to next year. So but you recorded entire 10,000 as income in current year. That is not at all correct. As per section number 128, everybody should maintain books of accounts. At the same time, that books of accounts should be true and fair view. So in that case, our books should always show true and fair view. But you recorded 10,000 as a current year income. Out of the 10,000, some amount is relevant to the next year. So definitely, you should not record 10,000 in current year as a income. So what you generally write entry? Bills discounted account debit 10,000 to customer current account 9,000 to interest or discount account 1,000. Correct? But my point is this 1,000 is not relevant only for current year. Out of this 1,000, some amount is relevant for next year also, but you recorded entire income in current year P&L account. If you open your current year P&L account, it shows on credit side by interest and discount account 1,000. That is not at all correct. Out of this 1,000, some amount is relevant to the next year. How can you show entire in current year? That means you have to eliminate some amount from this 1,000 that might be around 3 or 4,000 that is relevant for the next year. That 4 or 5,000 is called rebate on bill discounted. That's what our present question is. You have to find out what is rebate on bill discounted. Nothing but how much interest is relevant to the next year. Okay. So if you see first date bill is 15/10/21. So their term is 50,000 rupees, period is 5 months, discount rate is 8%. Discount rate is nothing but interest rate only. Okay, now. So come on. So 15/10/21. Let me write for you. So 15/10/21 for 5 months, that means what will happen? 15, 11 and 12 and 1 and 2 and 3. That means 15/3/22. 15/3/22 is the normal date, plus we have to add 3 grace days. So 15/3/22 plus 3 days means our due date will be 18th March 2022. 18th March 2022 is the correct due date. Now I have to find out 18th March is the due date. No, so we have to find out from the date of balance sheet to the due date. What is the balance sheet date? Normally our balance sheet date is 31st December, due date is 18th March. So find out how many days. So that means in January 31 days, Feb 22 is a leap year, no, 28 days, in March 18. So 31 plus 28 plus 18, 77 days. So you have to find out what is the interest for those 77 days. How will you get it? 50,000 into 8% into 77 by 365. You can do it like 50,000 into 8% into 77 by 365. You will get the answer. In the same manner for point number 2, 3 and 4 as well. Point number 2, what happened? 10, 11, 21. 10, 11, 21 to 4 months means 12, 1, 2, 3. That means 10th March 2022 plus 3 grace days. That means 13th March 2022 will be the due date. We have to find out time gap between 31st December to 13th March. That means 31 days in January, 28 days in Feb, in March 13 days, together 87 days. What is the answer? What is the bill amount, by the way? 30,000, no? So 30,000 into 7% into 77 by 365. You will get the answer. Okay, in the same manner for point number 3 and point number 4 as well. So very easy to answer this kind of question. So you can please do it for point number 3 and point 4. Please pause the video and do it on your own for point number 3 and point number 4 and point number 3 and point number 4, and give your answer in comment section and play the video and check your answer is correct or not. Now I will write all the date of bill and I will find out all the 4 answers, and you can check with your answer whether it is correct or wrong. Okay, yeah, that's it. So you can just pause the video and try to do it on your own. Okay, yeah, start. Okay, so first bill date is 15/10/21, 5 months. 5 months means 11, 12, 1, 2, 3 plus 3 days. That means 18th March 22. For second bill 10/11/21, 4 months. That means 12, 1, 2, 3. This is also 3, and 10 plus 3, 13. 13/3/22. Next one, third bill 25/11. 25/11, 4 months. 12, 1, 2, 3. This is also 3. 25 plus 3, 28. Next one, 20th 12/21, 3 months. 1, 2, 3. This is also 3 plus 3 days. 23 March 22. Okay, no? So next we have to find out rebate on bill discounted. Rebate on bill discounted means their balance sheet date 31st December 21. Find out the gap between these things. 31st December 21 to 18th March 22. What is the gap? January 31 days. At the same time Feb 28 days. In March 31 plus 28 plus in March 18 days. That means 77 days. Second bill 13th March 22. In Jan 31, Feb 28, March 13. 72 days. Correct? 31 plus 28 plus 13. 72. Yes, correct. For third bill 28th March, 31 plus 28 plus 28, 87 days. Fourth bill Jan 31, Feb 28, March 20, 79 days.
Correct. Third bill, I think grace days are missing, no? 23. 79 plus 3, 82. Now how to calculate? Very easy. For first bill, what is the rebate? 50,000 amount into 8% into 77 by 365. For second bill, what is the amount? 30,000 into 7% into 72 by 365. For third bill, 40,000 into 7% into 87 by 365. For fourth bill, 60,000 into 9% into 82 by 365. So let's find out one by one. 50,000 into 8% into 77 by 365. 843 point something. Second bill, 30,000 into 7% into 72 by 365. 414. Next, 40,000 into 7% into 87 by 365. 667 point something. 60,000 into 9% into 82 by 365. 1213.15. Okay, these are the answers. Check with your answers. Correct? Yeah. So tell me, what is the procedure to find out rebate on bill discount? At first, you have to find out due date. Second one, gap between balance sheet date and due date. Third one, bill amount into interest rate into this gap by 365. Add all those things, write entry. What is the entry? Interest and discount account debit to rebate on bill discount account. Because we have to transfer to rebate, no, we have to reduce it. To reduce it, income should be debited. That's what? Interest and discount account debit to rebate on bill discounted. Okay, na? How much total amount? That's what question number 17 is. Okay, na? Yeah. Next concept from banking company only. So from this concept, in recent December 2024 examination, they have tested one question for 7 marks. So the concept is secured loan versus unsecured loan. Generally, a layman thinks that secured loan means loans given based on security. Unsecured means loans without security. But here that is not a correct concept. So as per our accounting, as per our subject, so assume all loans are secured loans. That means banks always give loans to the customers based upon security. Then what about unsecured loans then? If every bank is giving loans based upon security, then that means there should not be any unsecured loans in any bank. But still we are discussing unsecured loan. What does it mean? Is it mean loans without security? No, not at all. That does not mean loans without security. Unsecured loans also constitute some kind of security. Then what does it mean? That's what I am going to explain right now. Okay? Listen. For example, we are some BBC Limited. We are one company. So we went or we approached SBI Bank for 10 lakh rupees loan.
So SBI granted us 10 lakh rupees loan. We received 10 lakh rupees loan from the SBI bank. So definitely there should be some security, otherwise SBI bank will not give that much of loan to BBC Limited. So for example, we have given some our shares only. We have given shares of our company to SBI. For example, or else I will simplify the example. We have given some land as a security. Land value is 13 lakhs. Then some people will get doubt. Sir, loan value is 10 lakh only. Why are you giving security more than loan amount for 13 lakhs? Obviously, I have to give more than what is the loan amount. Otherwise, they will not give loan to me. Because I am not selling my asset. I am giving just as a security. If I am selling my asset, then you have to ask me the same question. Why are you giving your asset at less than your value? Here I am not selling my asset or not transferring my asset. Here I am just giving my asset as a security. So here 13 lakh is my asset market value. So loan amount is 10 lakh. Now sit in the place of banker. Now you are a banker. So 1 year is completed. For example, interest rate is 10%. That means at first year end, what you should do, you have to pay interest, right? What is the interest? 10 lakh into 10%, 1 lakh. That means your total liability, not 10 lakhs from now onwards. So your total liability equals to principal 10 lakh plus interest 1 lakh equals to 11 lakh is your liability. But already we have given our land as security, right? Unfortunately, due to some situations or whatever it is, some reasons, our land market value suddenly has fallen down to 6 lakhs. Now think, in banker perspective, how much amount receivable from BBC Limited? 11 lakhs. But what is the present realizable value? 6 lakh. So out of this 13 lakhs, they can realize only 6 lakh. The remaining 7 lakh is unrealizable. This 6 lakh is called secured loan. This 7 lakh is called unsecured loan. So this is also some security is there, even this 7 lakhs also. But what happened? Market value has fallen down. Okay, now so this is how we have to bifurcate secured loan and unsecured loan. For example, 2 years. Actually, we found out for first year. For example, same thing happened after 2 years. They have not paid interest. That means what happened? 10 lakh principal. For first year 1 lakh. For second year 1 lakh. Total 12 lakh rupees is 11 lakh only, no? 11 lakh, this is 5 lakh. Total 12 lakhs. Then what will happen? Out of 12 lakh, 6 lakh is secured portion, 6 lakh is unsecured portion. Sometimes they will say compound interest. Then what I have to do? 10 lakh, compound interest means plus 10%, plus 10%. You know how to calculate compound interest. Correct? So similar kind of question they have asked in recent December 2024 exams for 7 marks. Unfortunately, that question has been picked up from our BCCA material. At the same time, that question is covered in our board book as well. So they have selected question from our book itself. Just they have slightly modified the numbers. That is question number 18. Have a look. Question number 18. So the books of a bank includes a loan of 5 lakh rupees advanced on 31st December 20. Interest chargeable at the rate of 16% per annum, compounded. This is not a simple interest, compounded interest. That too quarterly compounded. I think you know how many months per a quarter? 3 or 4? 3 months only. Per year 4 quarters, per quarter 3 months. So the security for the loan is being 7,000 shares of 100 each in a public limited company, valued 90 each. So
bank has given loan to some customer, so loan value 5 lakh. So what is the security? 7,000 shares into 100. So let me write it, then you will get more clarity. Question number 18. Loan amount equals to 5 lakhs. What is the security? Security shares. How many shares, by the way? 7,000 shares. Into 90 rupees value. 7,000 into 90 means, what is the security value? 6,30,000. Already we discussed the same concept. Definitely whenever banker is asking security, they will ask more security than whatever he is giving loan, because of depreciation of asset or inflation, anything. So what happened? There is no repayment till 31st March 22. Before that, interest rate 16% per annum. They are compounding quarterly, no? How many quarters per year? 4. That means per quarter interest how much? 4% per quarter. By the way, what is the date of loan, by the way? 31st December 2020. That means year beginning. Okay. There is no repayment till 31st March 22. So 31st March 22, up to this date, no repayment. First of all, tell me, this is the advance date. What is the next quarter ending? Quarter means 3 months, not 4 months. Don't get confused. Per year, 4 quarters. Per quarter, 3 months. 4 into 3, 12. Generally, people will get confused. Quarter means 4 months. No. 31st December 20, next quarter. That means Jan, Feb, March. That means 31st March 20. What is the situation? Plus 4%. What is the loan? 5 lakh rupees plus 4%. Next quarter, after March, April, May, June. 30th June 20. Again plus 4%. Next quarter, July, August, September. That means 30th 9/20 plus 4%. Next quarter, October, November, December. That means 31st December 20 plus 4%. Next quarter, 31st March 21. So already the 20 is covered, no? Then this is 21, this is 22. 20 is already covered. 21, 21, 21, 21. This is 22, 2022. So plus 4%. This is the last date they have given. Up to this, no payment has been made. So this is compound interest. No. Tell me what is the total outstanding balance? 5 lakh plus 4%, plus 4%, plus 4%, plus 4%, plus 4%. What is the total amount? Tell me. 6,08,326. This is the total outstanding balance. Okay. Next, what happened? All of a sudden, on 31st March 22, share value declined to 80 rupees per share. So, what is the number of shares? So, 7,000 shares into 80 rupees. So, that means my share value becomes 5,60,000. Now, think in banker point of view. Receivable amount 6,08,326, but realizable value of security is 5,60,000 only. So out of this 6,08,326, 5,60,000 is only secured value. Remaining balance is called unsecured loan. This is called secured loan. How much unsecured loan? Tell me. How will I get 6,08,326 minus 5,60,000, 48,326 will be called as unsecured loan. This 5,60,000 is called secured loan. Same question they have tested for 7 marks. They are very lucky, in fact. Okay. Maybe they may ask same question for you also. They may slightly modify the numbers, or they may adjust the. For example, they may ask you like compounded half yearly. Can't you do so? Plus 6%, plus 6%, plus 6%. Your answer is done. You have to check with the revised market value and compare. The balance is called unsecured loan. Realizable value is called secured loan. That's it. Okay, no? Yeah. Yeah. So next concept is again from banking company. This question is on DICGC and ECGC. DICGC means Deposit Linked Insurance Credit Guarantee Corporation. ECGC means Export Credit Guarantee Corporation. So actually, out of these two corporations, those two corporations are governmental corporations. So one is subsidiary of central government, second one is subsidiary of RBI. One is part of central government, one is part of RBI. See, these two corporations generally, they are not give any kind of loans to any banks or any customer. Generally what they will do, actually DICGC and ECGC are the corporations. They will give guarantee to the bankers when any person has taken loan. For example, the best example is, I think some of you are aware of this example. I think you know Andhra Pradesh. So recently in 2024 itself, central government has given some 15,000 crores rupees to the Andhra Pradesh government for the construction or development of capital for a new state. But if you observe in detail, in fact, central government has not given even single rupee. The reality is, they have given guarantee to the World Bank that you can, as a AP government, we can take loan from World Bank. If you want to summarize the entire statement, that means Andhra Pradesh can borrow 15,000 crores from the World Bank. Generally, World Bank will not give that much of amount to any single state government. So that is the reason our Indian government in the form of DICGC is giving guarantee to World Bank. No problem, you can give loan to the AP government. They will give you security. If there is any non-payment, you can collect that security. Still, if it is not realizable, as a DICGC, I will pay. That means DICGC is giving guarantee for the state of Andhra Pradesh to the World Bank. In the similar way, sometimes this DICGC may give guarantee to some companies, may give guarantee to the banks for taking loan of companies. Whenever companies has taken loans, maybe companies may approach DICGC. If DICGC or ECGC satisfied, they may give guarantee to the World Bank or any banker. Especially companies who are in the export business, for those ECGC will give guarantee to those lenders, maybe bankers. Now the point is, for example, we are ICICI Bank. So for us, what happened? Actually, we are ICICI Bank. We have given loan to some Reliance Industries Limited, value of some 50 lakh rupees. Definitely, already I told you, whenever banks are giving loan to any customer, definitely they will ask some kind of security. Without security, generally they will not grant any kind of loans. So here, ICICI Bank has given loan to Reliance Industries Limited, value of 50 lakhs. For example, we have given Reliance company given guarantee, no, not guarantee, as a security to the ICICI Bank. For example, land. For example, if Reliance company is unable to pay or fail to pay that outstanding amount, then firstly ICICI Bank will sell that land and realize that land. They'll collect that amount from the land. Still, if any amount is unrealizable or outstanding, then they will collect the same from the DICGC or ECGC who has given guarantee to that bank. Okay, now. So generally, what is this all concept? Whenever any person or any company has taken loan from any banker, sometimes for companies, governments will help in the form of DICGC or ECGC by the way of giving guarantee to the banker. Best example, AP government loan. Okay. So let's come to the question. You will get more clarity. Question number 19 is on your screen. Read the question number 19, please. Razatpeta Bank Limited had extended the following credit lines to a small scale industry which had not paid interest since March 2015. So there is a small scale industry is there. Already we had a discussion. Generally this DICGCs and generally they want to encourage SMSEs. They want to encourage small and medium scale enterprises. So balance outstanding is 35 lakh for term loan. Another export loan is there, 30 lakhs. Already we know that for term loan, DICGC will give guarantee. For export loan, ECGC will give guarantee. So percentage 40%, DICGC given guarantee. In export loan 50%, ECGC has given guarantee. Even though DICGC and ECGC has given guarantee, we won't leave those what you call term loan and export loan. They definitely will ask some kind of security. Without security, generally we will not give any kind of loans to anybody, even though those loans has been guaranteed by DICGC and ECGC. So what happened? For a term loan, 35 lakh rupees is given, even though some guarantee is there. That guarantee securities held is there 15 lakh. At the same time, for export loans also security 10 lakh. So realizable value of securities 10 lakhs and 8 lakhs. So here tell me, they are not paying interest since March 2015. What is the outstanding as on today? 35 lakh. Already I told you, if actually we are preparing accounts for the bank. So tell me, for a term loan, how much amount is receivable? Obviously 35 lakh is receivable. So before, while we have to realize that 35 lakh, so we are a banker, no? How much amount receivable from term loan? 35 lakh. Out of 35 lakh, directly we should not approach DICGC, give me money. We have to first realize the securities. If there is anything still balance, we can approach DICGC. That means out of 35 lakh, out of 35 lakh, how much is realizable? 10 lakh is realizable from that security. That means 20 lakh is unrealizable portion. Out of the 20 lakh, how much is covered by DICGC? 40%. That means 8 lakh is secured. That means here 8 lakh secured, remaining 12 lakh is unsecured. Already this 10 lakh is also secured. That means this is 25, no? 25 lakh into 40%. 10 lakh is secured, 1 lakh is 15 lakh is unsecured. Already 10 lakh is secured. So total secured loan is 20 lakh. Unsecured advance is 15 lakhs. Total 35 lakhs. Coming to export loan, what happened? 30 lakhs. So 30 lakhs is loan amount, outstanding. Out of 30 lakh, how much realizable value? 8 lakhs. That means 22 lakh is unrealizable value. Out of this 22 lakh, how much ECGC has given guarantee? 50%. 50% means 11 lakh. What is the balance portion? This 11 lakh is called unsecured advance. That means total secured is only 8 lakh plus this 11. 9 lakh will be the secured advances. Unsecured advances are 11 lakhs. That's it. 11 plus 8, 19 lakh is secured. 11 lakh is unsecured. Together 30 lakhs total outstanding. Enough. Okay, no? So how to do it, sir? So we have to firstly find out what is the outstanding balance. On that we have to deduct any realizable value of securities. On balance we have to take guarantee from DICGC. Balance will become unsecured loan. So you can check it out. 2519, correct. So these are the few questions in banking. Still some questions are there in banking. You can please check remaining questions also. Then since this is Super 50, I have selected only main questions, main important questions. Okay, yeah. So these are total banking company questions. Next chapter already I told you. So 3 chapters are very, very important in my perspective. What are those 3 chapters? Banking companies, electricity companies, insurance companies. So banking companies is completed from my end. Sir, just these 2 questions are enough for main exams. I'm not passing that statement. So just I am here discussing Super 50 questions. I'm expecting 1 question from these 2 questions. They may select another question also. So please, if time permits, prepare all the questions, but take these questions as a priority. After banking, next one, electricity companies. Next chapter, electricity companies. 19 is done, no? From question number 20 onwards. Yeah, I think you know electricity companies very well. So this is also an important chapter. So the main concept coming to question number 20 is security deposit. That means whenever, you know, already in a regular classes we had a discussion. At the time of taking connection, definitely the customer has to pay some amount as a security deposit. Sir, why should I pay security deposit, sir? You know, electricity is a post-paid service. Post-paid service means first customer will utilize the service, then customer will pay the amount. Prepaid service means firstly you have to pay the amount. For example, you want to fly from Vizag to Bangalore. That means you have to first pay the ticket fare, then you will get the ticket, then you can fly. But coming to electricity, you have, that means no need to any kind of prepayments. Firstly you have to, that means firstly you can utilize that service. At the end of month you will get a bill, you have to pay that bill amount. This is called prepaid service. Sorry, post-paid service. So electricity is a post-paid service. For example, one new company is there. So they consumed for the first month for 20 lakh rupees worth of electricity. Since this is a post-paid service, at the time of month end, so they are not paying electricity bill because they knew that their startup is not going to work and they want to just close startup. They want to just shut down that startup. In that case, definitely they will not pay any kind of electricity bill. In this case, the who is suffering losses? Obviously,
the service provider, electricity company, will face the losses. To cover this loss, so they have taken up with one concept called security deposit. Whenever a customer has taken an electricity services, definitely he has to pay some amount of security deposit. That means if in future, in any month, if a customer is unable to pay the electricity bill, then electricity company will adjust that security deposit amount. So that means if you are electricity company, you are receiving some amount from your customer as a deposit. See, first of all, tell me, if you are receiving a security deposit from your customers, tell me, is that asset or liability or income or expenditure? Definitely that is not an income. Why? Income means non-refundable. Refund is a refundable, no? At the same time, for example, you are electricity company, I am your customer, I paid some amount of security deposit. What is your obligation? Either you have to provide service of electricity, or else if you are unable to provide service, you have to give my money back. That means that is your obligation. In accounting language, rights or assets, obligations or liabilities. So that is the reason we have to credit security deposit. Whenever you are receiving any kind of security deposit, you have to write journal entry called whenever you are receiving security deposit, you have to write entry like bank account debit to security deposit account. This is the entry for receipt of security deposit. Definitely that is our obligation. That means company's obligation. Here company means electricity company. That is electricity company's obligation. Definitely if that is a obligation or liability, we have to pay interest on it. We have to pay interest to whom? Interest to customer. That means that is a year-end entry. Tell me, whenever interest is payable, what is the journal entry? Interest is an expenditure, no? Then what is the entry? Interest on security deposit account debit to, or you can write simply interest account debit to interest on security deposit account. For example, deposit amount some 10k, interest 10%, 1000. This is due entry. But in practical life, no electricity company will repay the money to the customers in the form of interest. Of course, the responsibility of payment of interest is always with electricity company only, but in practical life they don't pay interest on security deposit. Do you know the reason? Very simple logic. See, normally what is our tradition or what is our custom? Generally electricity companies will give the service to the customers. Customers will have to pay bill amount at month end. That is the correct one. But here what is the situation? Here electricity companies has to give money interest to the customers. Instead of giving interest to the customers, what they can do? They can simply adjust that interest in next month bill. That's it. That much easy. That means already they record it as an income, as a liability, just we have to cancel that liability, like interest on security deposit account debit to sales turnover. For electricity companies, sales turnover means their income from income from services. That is called gross turnover or net turnover. So these three are major entries for security deposit. What are those three? Bank account debit to security deposit account,
at the time of receipt of deposit. Second entry, interest account debit to interest on security deposit account. Third one, interest on security deposit account debit to sales turnover account. These three are entries for securities deposit. Okay, no? Clear? So we have one question on it. Let's check the question. Question number 20. So question number 20. Consider the following information provided by ABC Power Supply Company Limited. Security deposit received from a customer on 1/10/2020 for 2 lakh rupees. So we received security deposit on 1/1/2020. What is the journal entry for it? Bank account debit to security deposit account. Interest rate applicable was 8% for 2021 and 9% for 21-22. So for first year, actually their year ending is basically the accrued interest for the year is adjusted against the bill for immediate next quarter. So what is the first year ending? 31st March 21. So what is the interest rate? 8%. That means 2 lakh into 8%. But deposit received on 110, year ending on 31st March. That means what is the gap? 6 months, 3 plus 3. So 2 lakh into 8% into 6 by 12, 8,000. What is the entry for it? Interest expense account debit to security deposit account. At the same time, they are adjusting that interest in the next quarter. Next quarter means next 3 months. Next 3 months means 30th June 21. What is the entry for it? Interest accrued on security deposit account debit to sales turnover account. Well, again, next year, next quarter. In next year, same 2 lakh into 8%. So this is actually 12 by 12. So 16, 16. We have to transfer that to sales, what you call adjust sales turnover. What is the entry to adjust interest accrued on security deposit account debit to sales turnover account? Okay, na? Next one, question number 21. Okay, next question is again from electricity companies. So this question is on calculation of return on equity. So actually, personally, I am not expecting this question, but still some chance is there, because in recent examination they have asked interest on working capital problem. That is completely based on format. You know, return on equity is also completely based on format. But the point is, interest on working capital, at least we can do it by applying our knowledge. That means out of the given info, what are the working capital expenditure, like what are the current expenditure. But coming to return on equity, that is not that much easy to apply the concept. You have to, what you call, remember the entire format. So if you ask me personally, if I am preparing examination paper, definitely I will not pick up this question, because in this question student can't express, or student can't we can't test the knowledge of student. So instead they can test interest on working capital or else some other problem. Still chance is there, because sometimes examiners will pick the question just randomly, even without referring the answer. Of course, they refer the answer, but they definitely, maybe they may be seniors. They can't even solve the entire problem. They will just pick the question from the material. Okay, so that is the reason I picked this question from our material, and this question is in our board book as well. So return on equity, just nothing is here to explain anything. Just we have to remember the format firstly. What is the format? Gross opening equity less adjustments in opening equity, adjustments during the year, net opening. Net opening is the net result of previous three things, and then increase or decrease in equity due to additions during the year, less decrease due to decapitalization during the year. Less decreases due to reversal during the year. Then we will get net closing equity. Average equity equals to opening equity plus closing equity by 2. Then we have to apply a rate of equity. Then we will get total return on equity. Next, coming to question number 22. Question number 22 is on working capital question. Actually, they have asked the same question, exactly same, in recent December 2024 examination. So let me first of all explain concept of this. Generally, what is the formula for working capital? Working capital equals to current assets minus current liabilities. But while you are solving problems in electricity companies, you should not apply current assets minus current liabilities. Instead, you have to apply the one format given by the Electricity Act itself. Okay, so simply, actually this question is far better than previous question, nothing but return on equity calculation. This question is very easy. We have to consider only what are the current expenses, nothing but what are the relevant to the working capital expenditure. No need to remember everything in the format. You have to just use your knowledge. For example, they have spent some amount on salaries. You can add it while calculating working capital. If they spend some amount on purchasing some fixed asset, you should not add it. That means you should consider only all current expenses. Then you have to total the total expenditure. That is called working capital. On it you have to apply the interest rate. That definitely they will give it in the question. You have to apply interest rate on the working capital. The answer will be the interest on working capital is nothing but working capital into interest rate. So nothing is difficulty in question number 22. You should just apply your basic knowledge. What is that knowledge? We have to consider only expenses which we call them as a working capital. We should not consider any capital expenditure. Why? Because capital expenditures are not covered under working capital. Revenue expenditures are only considered as a working capital. So consider the following estimated information provided by the XYZ Power Supply Company Limited, rupees in lakhs in next 5 years. So cost of coal 2000 per year, cost of now tell me, cost of coal is given, cost of secondary fuel oil, and it is 200 per year for first 2 years and 300 per year for 3 to 5 years. And O&M means operating and management expenses 250 per year for first 2 years and 350 per year for year 3 to 5. Maintenance spares 100 per year. Receivables 1800 per year. Rate of interest 12%. Calculate interest on working capital. Okay. So this is the list of expenses they have given. Sir, how to do it, sir? Totally they have given the info for 5 years. Give 5 columns. Year 1, year 2, year 3, year 4, year 5. What is the first item? Cost of coal. How much? 2000 every year. 2000, 2000, 2000, 2000. Second one, what is the second item? Second item is cost of secondary fuel. 200 per first 2 years. First year 200, second year 200. 300 for 3 to 4, 5. 300, 300, 300. Next one. What is the next one? Operations and management expenses. You can ignore these two, no problem. Nobody will care about it. 250 for first 2 years and 350 for remaining 3 years. Maintenance spares 100 each year. Receivables 1800 each year. You have to just consider all those things and add it. That amount will be called as working capital, and they have given interest rate on it 12%. Apply 12%, so you will get 522. Let's check for year 1. 2000 plus 200 plus 250 plus 100 plus 1800 plus, that is 4350 into 12%. Our answer is 522. Exactly correct. And coming to year 2, in year 2, 2000 plus 200 plus 250 plus 100 plus 1800, 4350 into 12%, again 522. So why in year 1 and year 2 it is same? Because everything is same. Coming to year 3, 2000 plus 300 plus 350 plus 100 plus 1800. So 4550 into 12%, 546. In year 4, 2000 plus 300 plus 350 plus 100 plus 1800, 4550 into 12%, 546. In year 4, 2000 plus 300 plus 350 plus 100 plus 1800, 4550. In this year also 12%, 546. That means in year 3, 4, 5 answers are same. In year 1 and 2 answers are same. Why? Because they are clearly telling us there is change in from year 3 onwards. That could be one of the reason. So this is how we should calculate interest on working capital. Maybe they can test the same question in for your coming attempt also. So actually this question is recent December 24 examination question. For example, if they are again they are asking how to answer it, you have to consider all the items they have given and add it and apply interest rate on it, and you will get interest on working capital. That's it, nothing more than that. Okay, so this is all about interest on working capital. Done? Yeah, very easy. So with this we successfully completed banking and electricity companies. My dear students, is this just these two questions are enough? I can't say this is enough for main exam. As per my prediction, these are enough for exams, but still you have to check remaining questions as well. But take these two questions as most priority. Okay? So out of these 3 chapters, first one banking companies is done. Second one electricity companies is done. Third one, let's enter into insurance companies. Before entering into insurance companies, let me tell you, in banking companies, they may ask an MCQ with respect to section number 17, that is we have to transfer minimum 25% of the available profits to reserve fund. That is important. In electricity companies, MCQs are not that much important, mainly focus on problematic part. Okay. So next chapter is insurance companies. Already, if you are, I think you are aware of in your financial accounting there is a chapter called insurance claims. So same basics are applicable to the insurance companies as well. What are the fundamentals in insurance claims? Yeah, whenever a company or a business entity is in a fear of losing stock or losing profit, they'll take an insurance policy from an insurance company. The company or person or entity who is taking insurance policy is called insured, and from whom they are taking insurance policy is called insurer. Insurer means insurance company. Insured means the person who has taken the insurance policy. So generally, why people will take insurance policy? If anything happens to that insured person, the dependents of insured person will be benefited from the insurance company, because they will get a bulk amount after expiry of or death of a particular insured person. Same logic in loss of profit as well. But coming to accounting for insurance companies, group 2 subject, here my concept is not about LIC or such kind of things. My concept is about insurance companies. In group 1, we are discussed in the perspective of business entity, nothing but insured. In group 2, we are going to discuss in the point of view of insurance company, not in the point of view of insured or the person who has taken insurance policy. So here we are insurance company, we have to do accounting for insurance company, not for insured. Okay. So actually in this chapter, very small concept is there. They are repeatedly asking this question as well.
If you open recent 3 examination question papers, nothing but December 2024, June 2024, as well as December 2023, out of these 3 papers, the same question has been asked twice out of 3 attempts. There may be slight changes in a numbers or names, but out of 3 attempts, even for 1 attempt, they have just copy pasted from this material as it is. Okay? Come on. So question number 23, see, actually the concept is, normally you tell me, my dear students, how to find out profit or loss for any company. Ignore about insurance company for a couple of minutes. Tell me how we found out profit or loss, net profit or net loss. How to do it? Generally, we will open a P&L account, right? We open P&L account, the net result will be net profit or net loss. But in case of insurance companies, very easy to find out net profit or net loss. For the first time, we are using balance sheet to find out net profit or net loss. Maybe this fact may be shocking to some people who are completely listening for the first time this concept, but this is fact only. So for insurance companies, they will find out net profit by using what you call balance sheet. In balance sheet, they will find out what is the net profit or net loss. Actually, in insurance companies, there will be an asset or a fund called life assurance fund. On opposite side, there is a liability called net liability. How to get net liability? You don't worry. They will give in the question. They will give you a question. They will find out the present value. So you have to write on asset side what is my fund, and on liability side what is my net liability. The difference is called net profit. So let's come to question number 23. With that question, let's discuss in detail. So again, I'm expecting this question for your attempt also. Come on. The life assurance fund of Prakash Life Insurance Company Limited was 34 lakh. They are giving us the fund value. So already I told you, fund means our asset we have to write on asset side of balance sheet. Its actuarial valuation on 31st March 2021 disclosed a net liability of 28 lakh 80,000. That means they have given asset as well as liability. Already I told you how to find out net profit. On asset side we have to write life assurance fund 34 lakh. On liability side we have to write net liability 28 lakh 80,000. What is the difference? The difference will be called as a net profit. I will show you how to do it. Next one, an interim bonus of 40,000 was paid to policy holder. So I think already you know this concept if you follow my marathon. Generally, bonus is payable by companies to the employees, and if you go in deeper, sometimes company will pay bonus to their existing shareholders. But for the first time, in the case of insurance companies, companies will not give bonus to their employees or bonus to their shareholders. That means the main portion of profit they will give bonus as a bonus to the insurance companies will give main profit to the policy holders as a bonus. That means out of profits, insurance companies will give majority share to the policy holders, not to the shareholders. That too, I think you know the percentage, how much percentage we have to give it, right? So let me discuss in detail. During the previous 2 years, it's now proposed to carry forward 1,10,000 and to divide the balance between policy holders and shareholders. So they are asking valuation balance sheet, nothing but second one net profit, third one distribution of profits. So we have to find out balance sheet first, second one net profit, and third one we have to distribute that profit to the policy holders as well as shareholders. Okay, I think you know out of available profits, 95% of the profits to the policy holder, 5% to the shareholders. Okay, yeah, come on. Question number 23, let's do it. What is the first requirement? Valuation of balance sheet. Question number 23.
we have to draw the balance sheet. Yeah, already I told you on balance sheet there are only 3 items. On asset side we have to write life assurance fund. On liability side, net liability. Both are given in the question. Fund amount is 34 lakh, liability is 28 lakh 80,000. 34 lakhs. Fund amount is 28 lakh 80,000. What is the difference? The difference is called net profit. So total amount is already we know, because credit side is more when compared to debit side. The total amount is 34 lakhs. The difference is 34 lakh minus 28 lakh 80,000. 5 lakh 20,000 is net profit. This is called valuation of balance sheet. Very easy. We have to write life assurance fund on asset side, net liability on balance sheet side. The balance will be net profit. Okay. Yeah, they are asking net profit for 2 years period. So let's do it. How to find out net profit? Sir, already we found out net profit. Now again, what is the net profit? Please wait. So for second question, what is the answer? Net profit as per balance sheet. How much as per balance sheet? 5 lakh 20,000. But if you observe the question, some interim bonus was paid 40,000. What is the meaning of interim bonus? Interim bonus means they are paying bonus in between year, in mid of year. That means actually from where they are paying bonus? Out of profits only. Generally we have to pay bonus at year end, but they are paying a bonus at the mid of the year. That means, for example, if the bonus was not paid, if the interim bonus was not there, my profit is not 5 lakh 20,000, it will be something else. It will be more than 5 lakh 20,000. That means because of interim bonus was paid, my profit shows 5 lakh 20,000. If interim bonus was not there, my profit will be definitely higher than 5 lakh 20,000. How much higher than 5 lakh 20,000? Nothing but how much interim bonus paid? Interim bonus paid. How much? 40,000. That means total net profit is 5 lakh 60,000 after consideration of net profit. So we can say this is the correct net profit. Okay, na? This is the correct net profit, 5 lakh 60,000. Anything clear? Any doubts? Yeah. So first question is completed. Valuation of balance sheet. Second one is completed. Net profit for the 2 years period. How to get net profit? We have to consider net profit as per balance sheet, and we should add back interim bonus paid. Try to understand the logic why we are adding interim bonus paid. My dear students, remember one thing. If you are studying for CMA or CA, inter or final or foundation, whatever it is, please don't muck up the entire content. Definitely it will not be helpful to you a lot. In fact, it will be very stressful thing. Try to understand the concept, believe concept, trust concept. You can, if you are conceptually strong, you can answer any question. Please believe me.
For example, if you are just budgeting net profit plus interim bonus paid, I think you just know we have to add interim bonus to net profit. If you are unaware of why should I add, for example, in your main examination, they are giving after adding that value, again you will add that figure because you don't have conceptual clarity. Please be strong in conceptual clarity. Without conceptual clarity, don't expect result. Okay? So, they are asking one more thing, we have to distribute those profits or losses to the policy holders and shareholders. Already I told you, out of the available profit, 95% of profits to the policy holders out of available profits, or I can write profits (95%) 5%. 95% to the policy holders, 5% to the shareholders. Okay now? Yeah. Come on. So we should give this 5,60,000 to the two category of people. First category policy holder, second category shareholders. Okay? Please tell me, if they have given entire this 5,60,000 to policy holders and shareholders, you know, for policy holders 95%, for shareholders 5%. That means how much? 5,60,000 into 95%. That means policy holders will get 5,32,000. So by 95 into 5, shareholders will get 28,000. So if you have given entire profits to these two people, then how company can survive in future? For survival, definitely we need some reinvestment. Without reinvestment, definitely company will not grow. So that is the reason, out of this 5,60,000, definitely they should what you call retain. Retain means they can hold some amount for their need, for their future. So that's what they are giving us. They want to carry forward 1,10,000. That means they don't want to give this entire 5,60,000 to the policy holders and shareholders. They need actually 1,10,000. That means 5,60,000 minus 1,10,000. So the required only available profit is 4,50,000. So here you should understood one point clearly. Here available profit is not 5,60,000. Our available profit is 4,50,000. Out of this 4,50,000, now we should bifurcate into two categories. First category is policy holders. Second category is shareholders. For policy holders 95%, for shareholders 5%. Please calculate how much for policy holder. 4,50,000 into 95%, that means 4,27,500. How much for shareholder? 4,50,000 into 5%, nothing but 22,500. These are the distribution of profits to policy holders and shareholders. But already we paid interim bonus. How much? Interim bonus 40,000. Reduce it. 4,27,500 minus 40,000. That means 3,87,500. This is the profit still we have to pay to policy holder. For shareholders 22,500. Okay no? So this is the answer for question number 23. They can ask same question again and again. You can check it out. 5,20,000, 5,60,000, 387,500, 22,500. Our answer is 100% correct. How to do it? Tell me.
in 3 steps. Step number 1, you have to open balance sheet. On asset side, we have to write fund, liability side, net liability. Balance is called net profit. Second one, we have to find out correct net profit. How to find out correct net profit? Net profit as per balance sheet plus we should add interim bonus paid. Why should we add interim bonus? Because if there is no interim bonus, my net profit is not 5,20,000, my net profit is 5,60,000. Out of this profit, we know we have to share 95% to the policy holder, 5% to the shareholders. But basic requirement is there. If the company gives entire 5,60,000 to the policy holders and shareholders, then company can't grow in future. Definitely company needs some amount of profit to reinvest. That is called reinvestment. Without reinvestment, we can't expect growth. So that is the reason this company is retaining 1,10,000. Retaining means they are holding for reinvestment. That means 5,60,000 minus 1,10,000. The available profits are only 4,50,000. Out of 4,50,000, we should give 95% to the policy holder, 5% to the shareholders. 95% means 4,27,500. 5% means 22,500. But already interim bonus was there, that is 40,000. That means still we have to pay the rest amount 3,87,500. For shareholders 22,500. Okay? Yeah, this is how we have to solve question number 23. Similar question, question number 24. This is actually examination question. Exactly they are copy pasted from this question, from this material, exam question. I think it is December 24, if I am not wrong, subject to correction, or June 2024. One attempt. For out of last 3 attempts, they are tested one time. Okay? Yeah, let's solve this question as well. From the following figures of well life insurance assurance company limited, prepare a valuation balance sheet. How to prepare balance sheet? On asset side we have to write life assurance fund, on liability side we have to write net liability. The balance will call net profit. And profit distribution statement, same as previous question. Here also fund is given, interim bonus is given, and revenue account and net liability is given. So our requirement is fund as well as net liability. But what happened, if you observe where the students generally did a mistake, they'll took this balance as a fund, this as net liability. The difference will be the net profit, but that is not correct. Why? This fund is as on 1/4/2021. This net liability is on 31st March 22. How can you compare asset and liability on different dates? Both should be on single date. So now the point is, so net liability is clear for 31st March 2022. Now the point is how to find out fund on 31st March 2022. Listen, I will tell you how to find out. Normally, life assurance fund means revenue receipts minus revenue expenses. We can say in revenue account the balance is called life assurance fund. That's what they have given, but with a different name. Balance of revenue account is nothing but this is life assurance fund only. You should not consider it because that is the opening figure. We need closing figure. If you took 167.15 as your fund, definitely your entire answer will be wrong. Before taking, not only for this question, for any question, you have to check whether total assets and total liabilities on same date or not. Sir, what happened if I took 167.15? If practically that is not at all correct. Balance sheet means assets and liabilities position. How can you take balance sheet is on year beginning, assets on year beginning, liability on year end? How can you compare? That is not at all correct. Your books should not show true and fair you. In fact, your balance sheet should not get tallied if you took different figures and different dates. Balance sheet should be on single date only. Assets and liabilities should only on single date. If you are taking fund on 1st April and liability on 31st March. How can you compare these two? Not at all possible. So, the company declares a reversionary bonus of 185 per 1000 rupees and gave policy holders an option to take bonus either in cash or else cash 105 per 1000 or else they may take normal bonus. Total business conducted by the company 600 lakhs. Company issued a profit policy only. 3/5 they have taken in cash. So first ignore this concept. Let's focus on balance sheet valuation. Then we'll come to additional information. Let's solve question number 24. We have to open balance sheet. On liability side, I think I am wrong. On liability side, net liability. On asset side, what is the fund name? Life Assurance Fund. Both the figures has been given in the question. Liability is 165, fund is 240. 240, 165. The difference is called net profit. What is the difference? 240 minus 165. 75 is called net profit. Okay, our first task is completed. Total amount is 240. Done. Second part. What is second part? Calculation of net profit. How to get net profit? Net profit as per balance sheet. How much? 75 lakh plus we should add interim bonus. Interim bonus paid. I think you know how we should add interim bonus. Why should we add interim bonus? So this is 25 lakhs. So together 100 lakhs is the correct net profit. So out of this 100 lakh we should give 95% to the policy holder, 5% to the shareholders. But before giving to policy holders and shareholder, we should check one thing. What is that? Whether they are retaining any amount for their future or not. If they are retaining it, we have to reduce, otherwise ignore. Let's check the question. Is there any info about retaining? Nothing. They don't want to carry forward anything. That means out of this 100 lakh, 95 lakh is to the policy holder, 5 lakh is to the shareholders. Already for policy holders some interim bonus is paid, 25 lakh. That means 70 lakh is still payable to policy holder and 5 lakh is payable to shareholders. That's it. Here interim bonus paid means bonus paid to policy holders, not to the shareholders. Keep it in your mind. So what is the entry for it? For this balance sheet, life assurance fund account debit to P&L account, and they are paying bonus. No, what is entry for due entry? P&L account debit to bonus payable, and for reversionary bonus, if they are using fund, P&L account debit to fund. If they are paying in cash, bonus payable. If they are not paying in cash, P&L account debit to fund. Your fund account will get increased. So this is very easy. How to find out cash, how to find out not in cash. So total business is 600 lakhs. Out of this they told you for every 1000 rupees I will give you 105. So that means how much? 600 lakhs. I can say 600 lakhs, 100 lakhs by 1000 into 105. So only 3/5 persons will agree to it. That means 37,80,000 is payable in cash. So remaining persons, what happened? They are not interested in cash. That means for them 600 lakh by 1000 into 185 into 2 by 5. 600 lakh by 1000 into 185 into 2 by 5. So they will get 44.4 lakh, 44 lakh 40,000. That's it. So we have to write if payable in cash, how much? 37 lakh 80,000. What is the entry? Bonus payable in cash. P&L account debit to bonus payable in cash. At the time of payment, bonus payable account debit to bank. Done. If they are not taking in cash, the entry will be P&L account debit to fund account. That's it. Okay. So you can expect question number 24 again or 23. What is the difference between 23 and 24? In 23, they have not discussed about any kind of bonus. In 24, they discussed about bonus element. That too, bonus in two types. One is cash bonus, second one is non-cash bonus. So what is the next question? Question number 25. So what is the question? This question is on claims. So from the following figures appearing in the books of fire insurance company, show the amount of claim. They are asking how much claim would appear in revenue account. So you know, for insurance companies, the major income is in the form of premium, major expenditure is in the form of claim. So for direct business, for reinsurance, for direct business, how much paid? For 46,70,000, 7 lakh. Claims payable, opening payable, closing payable. Claims received from reinsurance. You know what is the concept of reinsurance? So receivables, opening, closing, expenses, 2,30,000 out of 2,30,000, 35,000 for surveyor's fee, 45,000 for claims. Okay. So we should tell how much amount should I record in claim. Sir, very normal final account adjustment. How much we should record? Claims paid plus closing outstanding minus opening outstanding. That's it. Very easy. We have to say how much paid plus closing outstanding less opening outstanding. That's it. What is the question number? Let's do it. Question number 25. So what is the format? Claims paid during the year. For this we have to add closing outstanding minus opening outstanding. That's it. Then you will get the answer. But what is the problem? There is a direct business is there, reinsurance business is there. Now we have to find out how much paid, how much outstanding, how much closing, how much opening outstanding separately. Then we will get to know the answer. So let's find out first claims paid under working note number 1. How much paid? Tell me how much paid for direct insurance? 46,70,000. At the same time, we are paying for reinsurance also. How much? Here we are paying 7 lakhs. What is the total? 46,70,000 plus 7 lakh. That means 53,70,000. 53,70,000 is the total claims paid. But unfortunately, some expenses are there which are relevant for claims. How much? 35,000 plus 45. 35,000 plus 45,000 means 80,000. So these are relevant to expenses for claim. How much? 80,000. So minus, that means 52 lakh. Actually they are also expenditure, no? We should add it. Why should we reduce? Yeah, 53,70,000. Those are also expenditure, no? Claim is not an income. So total 53,70,000 plus 80,000. That means 54,50,000. 54,50,000. Okay? Yeah. If you open the question, we received some claim 2,30,000. That means out of this 54,50,000, we are not paying entire 54,70,000. Out of it, we received 2,30,000 from reinsurance. So minus it. So the net amount paid is minus 2,30,000. So 52,20,000 is the net paid amount. Sir, why should you deducted reinsurance, sir? Sir, this 54,50,000 is paid from my pocket, but don't worry, you are receiving 2,30,000 from your insurance, from reinsurance. That means the net paid amount is out of from your pocket 52,20,000. So this is 52,20,000 I got from working note number 1. Second, working note number 2, closing outstanding. Working note number 2, closing outstanding. Come on, where is the closing outstanding? Closing outstanding means claims payable on 31st March 2014. How much? 8,12,000 from direct business. 8,12,000. At the same time, from reinsurance. From reinsurance, how much? 53,000. What is the total? 8,12,000 plus 53,000. So total 8,65,000 is outstanding. But don't worry, some reinsurance receivable is there. How much? 1,13,000. Reduce it. So if you understand, every time I am deducting reinsurance. That means 7,52,000 is your closing outstanding. So write in the format 7,52,000 we got on working note number 2. Last one, opening outstanding, working note number 3. Working note 3. Opening outstanding. Again same, from direct business, from reinsurance. How much from direct business? This is direct business, claims payable. How much? 7,63,87. 7,63,000 plus 87,000. How much? 763,000 plus 87,000. So total amount is 8,50,000. So again don't worry, minus reinsurance receivable. Check in the question, some receivable is there. How much? 66,000. So minus 66,000. Reduce it. 8,50,000 minus 66,000. 7,84,000. Substitute in our format. Minus 7,84,000. Now we will get the answer 52,20,000 plus 7,52,000 minus 7,84,000. Our answer is 51,88,000. Okay, this is for 7 marks. See how beautifully we read everything we covered. How beautifully we have mentioned working notes. Working note number 1 for paid, number 2 for closing outstanding, number 3 for opening outstanding. We just substituted the figures and we got the answer. This is where we should record in revenue account. Okay. So remember, they may ask a similar kind of question for your attempt also. So same format you have to write for 7 marks. Not even half mark will get reduced. Yeah, that's it for question number 25. Now it is Ind AS time. I think you know weightage of Ind AS. Ind AS weightage is actually not a weightage. I'm telling this word confidently. You will get 9 marks for your June 2025 and December 2025 examinations. That is 1/7 plus 1/2. Okay. So what are the standards in our syllabus? First one, Ind AS 1. Second one, Ind AS 2. Third one, Ind AS 19. 10 as well, no? Ind AS 10. Fourth one, Ind AS 19. Fifth one, Ind AS 33. Sixth one, Ind AS 37. Ind AS 1 is purely theory content. Actually, I have not covered even any question in Super 50. You have to refer theory questions, especially fundamental accounting assumptions like GCA, going concern consistency accrual, and PSM, prudence substance over form materiality, and not at all important. Second one, Ind AS 2, 10, 19, 33, 37. So definitely I'm very much confident you will definitely answer this MCQ. It will be very easy. But the problem is about this 7 mark question. Sir, from where they will test 7 marks question? Sir, I'll tell you 2 standards. Definitely the Ind AS question comes from those standards only. First one, Ind AS 33 is most expected standard. Otherwise, Ind AS 19. That means I'm not recommending you to ignore remaining standards. Give most priority, high priority to these 2 standards. As per my prediction, question will comes from these 2 standards only. If they are asking question from any other standard, that will be very easy, because Ind AS 10 is pure theory concept, 2 is easy, 37 is theory. So the only available standards are 33 and 19. Definitely they should ask question from this area. Okay. So I have not covered Ind AS 1 in Super 50 because theory chapter. So I will cover remaining standards in this Super 50 session. So firstly, let me enter into Ind AS 2. Okay. Come to your material. Question number 26 is on Ind AS 2. Before solving question number 26, you should know what Ind AS 2 says. Generally,
requirement of Ind AS 2 is how to value, objective of Ind AS 2 is how to value our inventory. What Ind AS 2 says, your inventory should always be valued at cost or NRV, whichever is lower. That's what Ind AS 2 says. That is the main core content of Ind AS 2. So if you want to tell me, if you want to ask me, tell me Ind AS in single sentence, I will say, as per Ind AS 2, inventory should be valued at cost or NRV, whichever is lower. This is what the main content of Ind AS 2. Now the point is, what is the meaning of cost? What is the meaning of NRV? So NRV is depend on whether you are finding for finished good or work in progress. If you are finding for finished good, NRV equals to expected selling price minus expected selling cost. For work in progress, NRV equals to expected selling price minus cost of completion minus expected selling cost. Coming to cost, this is very easy. You have to add all directly attributable costs which are relevant for bringing that asset into location, put into use. Okay, so these all are basic things. These all are already covered in your marathon or else regular classes. Okay, sir, if anybody, sir, actually I'm watching your Super 50, I understood very well, but still because of lack of full clarity on concept or because of my coaching is not at all strong, so better I am looking for regular classes. If you feel so, definitely go for it. It will be helpful to you. This is a professional course. Just if you watch Super 50 or marathon, that is not at all enough. Proper coaching is needed. Definitely I am very much confident this Super 50 and marathon will help you out to get 40 or 50 if you are listening for first time. But my suggestion to you is, if you are not yet ready for exams, then hold and purchase my classes on YouTube, my BCCA app. So the cost is nominal cost. It will be around 6,000, or if you get some discount, it will be around 5,000 plus. So for 5,000 you will get full clarity. It almost it is 100 hours plus content. Each and every topic is clearly explained. It's available in Telugu and English, and we are going to launch English recorded classes also. Okay, yeah. So come back to the concept. So in AS 2, the main content is we should value our inventory at either cost or NRV, whichever is lower. Come to question number 26. The total stock of A Limited as on 31st March 21 is 5 lakhs, of which stock amounting to 31,000 were not ascertained as per Ind AS 2. Compute the value of stock as per Ind AS 2. So different types of products are there. PST. Cost of material has been given 10,000, 5,000, 12,000. Ignore about these totals, please. Otherwise you will get confused. So at the same time, in next column they have given production expenses incurred. In next column, selling expenses to be incurred. To be means
expected selling cost. This is expected selling price. This is production cost expenses incurred. Already I told you, whatever the expenses you are going to incur till the asset put into location or use, you should add all those expenses to the cost. That means for a first product, cost is not 10,000, it is 10,000 plus 2, 12,000 is the cost. So let me write question number 26. So product P, what is the cost? 10,000 plus 2,000 equals to 12,000. What is NRV? NRV equals to 15,000 minus 1,000. Equals to 14,000. So cost is 15,000, 12,000, NRV is 14,000. So tell me whichever is lower. Therefore 12,000 is the cost of product P. In the same manner for product, what is the next product? S, right? Yes. Yes. What is the cost? What is the NRV? Cost equals to 5,000 plus 0, nothing but 5,000. What is the NRV? 4,500 minus 500, you should not add it. 4,500 minus 500 equals to 4,000. Therefore, cost is 5,000, NRV is 4,000, whichever is lower, the answer is 4,000. Next, T, product T, again same, cost NRV. Cost equals to 12,000 plus 3,000. Equals to 15,000. NRV 18,000 minus 2,000. Equals to 16,000. Whichever is lower, obviously 15,000. So total cost 12 plus 4, 16 plus 15, 31,000. That is your answer. Yes, correct. You have to write this provision also. What is the provision? As per Ind AS 2, inventory should be valued at lower of cost or NRV, or you can write in, or you can write like this: valued at cost or net realizable value, whichever is lower. Anything is fine. Okay, this is how we should solve question number 26. Question number 26 is the only problem I took it from Ind AS 2. Because this is super 50, I can't add all questions here. Similar concept, no? If they have asked any question, this knowledge is enough. So next one is Ind AS 10. So question number 27. A Limited closed its accounting year on 31st March 21, and the accounts for that year, for that period, were considered and approved by the Board of Directors on 20th May 21. The company was engaged in the boring tunnels for Metro Railway. While doing the boring work on 1/6/2021, it hit an aquifer, and as a result, 18 buildings were damaged. It was estimated that there would be extra cost to the tune of 15 crores. You are required to state with the reasons. How would you deal with that in your financial statements? See, actually what Ind AS 10 says, it is discussing about events after reporting period. That means already you know, for each and every company, after preparation of financial statements, it should be approved by the board of directors. That means there are two dates are important. First one is date of report. Second one is date of approval. If anything happened in between these two dates, that is called events after reporting period. For this, Ind AS 10 is applicable. If anything happened after this date, Ind AS 10 is not applicable. So here what happened? Our books closing date is 31st March and date of approval is 20th May. Event happened on 1st June. That means event is happened on after date of approval. So if anything happened after date of approval, so Ind AS 10 is not applicable here. That is the answer. Ind AS 10 is not applicable. You have to write the provision as per Ind AS 2 events after reporting period. So that might be favorable or unfavorable. Okay? Yeah. So Ind AS 10 is also completed. So next one is Ind AS 19, 33, 37. So let's focus on Ind AS 19 next. So question number 28 and 28. This is 29. So unfortunately some printing mistake. 28, 29 or comes from Ind AS 19. You know, Ind AS 19 is discussing about employee benefits. Mr. X is an employee of ABC Limited. His annual salary is 15 lakhs. The company follows a 300 working day policy. As per the policy of the company, Mr. X is entitled to a leave of 10 days for 2021. He, however, utilizes 8 days leave. The unutilized leaves are not allowed to be carried forward but are settled by way of payment to the employee. Compute the total employee benefit expenses of ABC Limited in respect of Mr. X. Sir, already you know, for any business entity, there is a concept called paid leave policy or leave policy. For example, you are working for some corporate, so their total number of leaves in a year are 10 leaves. For example, if you utilized 8 leaves, the remaining 2 days are called unutilized leaves. So generally, what about these 2 days leaves? So generally, some companies follow these 2 days will be carried forward to next year. That means in next year you can take totally 10 plus 2, 12 days leaves. Some companies don't follow this carry forward policy. Simply, they will give you extra payment. So that is called accumulating paid leave or non-accumulating paid leave. If they are carry forwarding, that is called accumulating policy. If they are not carried forward, that is called non-accumulated policy. If they are carried forward, you should create a provision. If they are not carried forward, you should give extra amount. So in this question, what happened? They are not allowed to carry forward. That means they will give you some extra amount. See, what is the total salary of Mr. X? His salary is 15 lakh. So how many days he has worked extra in addition to others? 2 days. Why? Because 10 out of 10 days he utilizes 8 days. So 2 days are unutilized leaves. For those 2 days we have to give extra payment, right? So how much extra? For 15 lakh is a total salary for 300 days. For 2 days how much? 15 lakh by 300 into 2. That means 10,000 is extra payment. His original salary is 15 lakh. Total 15 lakh 10,000 is the total employee benefit expense in respect of Mr. X. Question number 29. Consider the following information. So this is the recent examination question, I think December or June 2024. Number of employees same as previous year 150. Second one, employees turnover rate. I think you know this. Employees turnover rate means that much of number of employees are left from your entity. 6%. Bonus paid to each employee last year 1 lakh. Increase in rate of bonus 7%. So tell me how much bonus. Sir, we have to expect or estimate the bonus. They are giving everything. So let me write question number 29. number of employees. How many number of employees in last year? In last year equals to how many number of employees? 150. What is the employee turnover rate? Employee turnover rate equals to 6%. Employee turnover rate means that much number of employees are left the entity. That means number of employees in current year equals to 150 minus 6%. 150 minus 6% means around 141 if I am not wrong. Yes, correct. 141. So, what is the bonus in last year? Bonus in last year. Bonus in last year equals to 1 lakh rupees. So current year 7% increase. So current year bonus equals to 1 lakh plus 7%. So 1 lakh plus 7% equals to 1 lakh 7,000 is the current year bonus. So what is the total expected bonus? Therefore, bonus amount equals to 1 lakh 7,000 into 141. 150 lakh 87,000, or you can say 15 crore 87, what you call 1 crore 50 lakh 87,000 or 50 lakh 87,000, anything is okay. 150 lakh 87,000. So what is the entry? Employee benefit expense account debit to provision for bonus. One more question is there. Question number 30 is also from Ind AS 19. This question is also very, very important with respect to plan assets and benefits. So focus on it. The following information applies to a company's defined benefit pension plan for the year. So they have given fair market value of plan assets at the beginning of year 2 lakhs, at the end of year 2 lakh 85,000, employer's contribution 70,000, benefits paid 50,000. Tell me a rate of return. Sir, very easy. Sorry, don't think too much. That means plan asset means our investment. We invested somewhere. So at year beginning, what is our investment value? What is the question number? Question number 30. So fair market value of plan assets at the rate of beginning of year. So what is our initial investment value? It is 2 lakh. So again employer contributed, that means our investment value got increased, plus employer contribution. How much employer contributed? 70,000. So out of it we have paid some benefits minus benefits paid. How much? 50,000. So 2 lakh plus 70 minus 50, it should be 2 lakh 20,000 is the my total investment. But what is the closing fair market value of fair value, not fair market value, fair value we can say. That's what they have given now in question. Market value, that is okay, fine. Fair market value of plan assets at end of year, at beginning 220. So after all adjustments, end value is 2,85,000. That means how much increased? This 65,000 is because our return or our profit or our interest. So this is how we have to find out. Don't look at the answer in anything else. Very easy. We have to consider opening figure and our contribution minus benefits paid. So with this, Ind AS 30 is completed. Question number 30 is completed, as well as Ind AS 19 also completed. Next one, Ind AS 33, very, very important standard. D Limited had outstanding ordinary shares of 10 lakh on 1/4/2020. Profit for the year is 20 lakhs. D Limited had 12%, 20,000 convertible debentures outstanding, 100 each, to be converted into 10 ordinary shares. Tax rate 30%. Calculate basic EPS, diluted EPS. So firstly, we should find out what is the question number? Question number 31. So they are asking two things. One is basic EPS. Second one is diluted EPS. So first one, basic EPS. What is the formula for basic EPS? Basic EPS equals to profit or loss attributable to ordinary equity shareholders divided by weighted average number of equity shares. So what is profit or loss attributable to ordinary equity shares? Nothing but, if nothing is given, profit itself, profit or loss attributable to ordinary equity shareholders. Nothing but how much? It is 20 lakhs. By weighted average number of equity shares. If nothing is changed in the current year, that means if there is no buyback, no fresh issue, the number of shares is equals to vanes. So how many number of shares we have? 10 lakhs. So 20 lakh by 10 lakhs equals to 2 rupees. That is basic EPS. Second one, they are asking diluted EPS. What is the formula for diluted EPS? EAESH plus adjustments by adjusted vanes. What is the meaning of EAESH? Nothing but profit or loss attributable to ordinary equity shareholders. I think you know what is the meaning of diluted EPS. Diluted EPS means a potential EPS. That means if we have convertible debentures, in future they will be converted into equity shares. If they converted into equity shares, no need to pay interest. Why? Because there will be no more debentures. So our liability will get increased. That means our expenses will get decreased in the form of non-payment of interest. At the same time, number of shares will get increased. So let's check it out. So how I will tell you how to find out diluted EPS. So what is the EAESH? Already we know that 20 lakhs plus adjustment means we have to add interest, we have to reduce tax. Why we have to reduce tax? Because there will be no more tax benefit. By adjusted vanes, I will tell you how to do it. So first of all, 20 lakh plus what is the interest on current debentures? How many debentures we are holding? 20,000 debentures, 100, 12%. So 20,000 into 100 into 12%. That means 2,40,000 is the interest. On it we are getting tax benefit till now. What is the tax benefit? Into 30% minus 72,000. So my dear students, don't apply 30% all the time. You have to check in the question what is the tax rate. If they are given 40%, your answer will be 96,000 as a tax. Next, adjusted shares means what will happen? Presently we have 10 lakh shares plus number of shares will get increased. How many shares? So presently we have 20,000 debentures. No, 20,000. Each debenture will be converted into 10 shares. That means 20,000 into 10, 2 lakh shares. What will happen? So it will become 12 lakhs. So numerator 20 lakhs plus 2,40,000 minus 72,000. It is 21,68,000. Come to denominator 10 lakh plus 2 lakh, 12 lakhs. Therefore, diluted EPS equals to 21,68,000 by 12 lakhs, nothing but 1.80. Basic EPS is 2. Always your diluted EPS is less than basic EPS. That's what proved in this problem also. So that is all about question number 31. One more question is there from Ind AS 33. Let's do it. Consider the following information given by F Limited. Net profit for the year ended 86,50,000. Paid up share capital 25 lakh ordinary shares of 10 each and 1 lakh 10% debenture of 100 each were issued on 31/9/2020. Tax rate 30%. Conversion rate 10 shares for each debentures. Tell me first of all, what is the difference between previous question and this question? The main difference is this date. Very, very important. Don't ignore. Same as previous question. They are asking diluted EPS, but for the sake of simplicity or for the sake of more better presentation, even though they are not asking basic EPS, please solve basic EPS also. It will be more beautiful presentation. So let's write first given info, then let's find out both the EPS. Question number 32. What is the given info? Profit, net profit. Net profit equals to 86,50,000. Next, paid up share capital 25 lakh, nothing but number of shares. $25 lakhs. Next, some debentures are there, 10% debentures. Tax rate 30%. Firstly, I will find out basic EPS. You have to write entire formula. What is formula for basic EPS? Profit or loss attributable to ordinary equity shareholders by weighted average number of equity shares. So 86,50,000 by 25 lakhs by 25 lakhs. So tell me what is the answer? 86,50,000 by 25 lakhs, 3.46. That is basic EPS. So what about diluted EPS? Diluted EPS equals to my net profit plus interest minus tax. What is the interest actually? How many debentures? 1 lakh debentures. What is the face value? 100. What is the interest rate? 10%. But it is issued on 31/9. That means they are with us only for 6 months. Why? Because 10, 11, 12, 1, 2, 3 into 3/12. That means the interest is, what is that? 1 lakh into 100 into 10% into 6/12. It is only 5 lakh. And what is the tax rate they have given? 30%. No, 5 lakh into 30% means 1,50,000. Done. Coming to now weighted average number of shares. Already existing shares are 25 lakh. What will happen? Each debenture will be converted into 10 shares. How many debentures we have? 1 lakh. 1 lakh into 10. 10 lakh is not the correct answer. Why? Because we have those debentures only for 6 months. No, into 6/12. So 5 lakh. So 25 lakh plus 5 lakh. Please try to understand how we got 5 lakh instead of 10 lakh. Why we should not write 10 lakh? Because those debentures are with me only for 6 months. Then what is the answer? 86,50,000 plus 5 lakh minus 1,50,000. Nothing but 90 lakhs is the numerator. At the same time, coming to denominator, 25 lakh plus 5 lakh, 30 lakhs. That means 90 lakh by 30 lakhs is nothing but 3 rupees is diluted EPS. So this is our question number 32. So one more question is there from Ind AS 33. So I have included 3 questions. Why? Because the standard is very, very important. Listen, E Limited had 10 lakh ordinary shares outstanding on 1/4/2020. Profit for 2021 was 24 lakh. Average fair value per share during the year was 20. E Limited has given share option to its employees 2 lakh shares at the option price of 15. Calculate basic EPS and diluted EPS. I think not unfortunately, because I have limited scope, I ignored bonus issue and rights issue concept. Even those questions are also important, especially rights issue problem, don't ignore. Here I have included options problem. Why? Because in recent examination they tested rights issue one time, bonus issue second time. So I am expecting for you options for your attempt, but still don't ignore bonus issue and rights issue. Already I covered those problems in my marathon very clearly. Okay, first focus on this question, after that you can go to marathon if possible. Okay, I'm expecting this question for your attempt. Yeah, let's see. First one, what is the requirement? Basic EPS. Very easy, no? What is the profit? 24 lakh. Number of shares? 10 lakh. 24 lakh by 10 lakh means 2.4 is basic EPS. Second one, diluted EPS. How to find out diluted EPS? Here what happened? Number of employee options are 2 lakh. Okay. So actually our market value is 20 rupees, but we are offering at 15 rupees only. Listen. What is the question number? Question number 33. So basic EPS is very easy. That's why I am not writing here 2.4. Coming to diluted EPS. Here what happened in diluted EPS? So out of we are offering 2 lakh options to our employees. So our fair value in the market is 20, but we are giving them at 15 rupees only. If we give it to outsiders, we will get 2 lakh into 20 means 40 lakh. But since we are offering at 15 rupees, we will get only 30 lakhs. That means we are losing 10 lakhs. If you convert into shares, that means we are giving extra 5 lakh shares. Sorry, extra 10 lakh by 20 means 50,000 shares. So how to do it? So what is the present earnings? 24 lakh. Present shares 10 lakh. Extra shares we are giving 50,000. No, very easy. Diluted EPS equals to, in the case of these options, numerator will not get changed. That is always 24 lakh. But what happened on denominator? The existing number of shares already 10 lakh plus extra shares we are giving at free of cost. No, how I got this 50,000? If I give to outsiders, I will get 40 lakhs. If I give to employees, 30 lakhs. So I am losing 10 lakhs. If I convert into number of shares, that is 50,000. So 24 lakh by 10 lakh, 50,000. 24 lakh by 10 lakh, 50,000. Answer is 2.2857. That is the diluted EP. Yes, still please go to your material and check bonus issue and rights issue question in case of diluted EPS. Very, very important. So this is all about question number 33, and surprisingly Ind AS 33 also completed with the question number 33. Okay, yeah. So next standard is after Ind AS 33, last standard. What is the last standard? Ind AS 37. So come to Ind AS 37, question number 34. What is Ind AS 37? provisions, contingent liabilities and contingent assets. X Limited has become subject to an obligating event on 1/4/2020, for which the company is committed to expenditure of 5 lakh at the end of 10 years. An appropriate discount rate is 10%. Show the same is to be treated by X Limited. So, we have to be incurred 5 lakh after 10 years. We have to take that figure into present value. That's it. I think you know how to take present value. So, apply what is the present value factor? 1/1.1 first year, second, third, 4, 5, 6, 7, 8, 9, 10 into 5 lakh. Answer is 1,92,771.6447. That much provision we should create as on today. What is entry for it? Expense account debit to provision account. At year end, what will happen? Plus, that means into what is the percentage? 10%. No, again we have to increase our provision. So interest account debit to provision. Next year also same. So very easy question. Ind AS 37. Actually, Ind AS 37 is not at all important for your exam. If they want to test question, this is the only question they can test. Okay. So that is total question number 34, and with this Ind AS 37 is completed. At the same time, total Ind AS are completed. We successfully completed the main part: banking, electricity insurance, and Indian accounting standard, and rights issue, and forfeiture of shares, I think. Okay, superb. So now let's come to question number 5, which is on buyback of equity shares. The share capital of a beta company limited consists of 1 lakh equity shares of 10 rupees each and 25,000 preference shares of 100 rupees each, fully called up. Its securities premium account shows a balance of 40,000 and a general reserve of 7 lakh. Company decide to buy back 20,000 equity shares at 12 each. Pass necessary journal entries. So I think you know there are 3 cases in buyback. So one is buyback if there is no securities premium. Case 2 is buyback securities premium and premium is paid, and case 3 is not paid. So here what happened? Fully called up, securities premium paid or not paid? Let's see. So not paid only. So what is the entry for it? Share capital account debit, securities premium account debit to shareholders. At the time of payment, shareholder to bank. You know, as per section number 69 of Companies Act 2013, at the time of buyback or redemption of preference share, we should transfer to the extent of nominal value to CRR. That's what the third entry. Okay, so very easy. Buyback, we should write firstly cancellation entry or due entry, second payment entry, third one section number 69 entry.
Okay. So next question number 13. This question is from cash flow statement. Okay. Yeah. So already we know in cash flow statement there are 3 types of activities: operating activities, investing activities, financing activities. Operating activities means which are day-to-day activities. For example, which are routine in nature: salaries paid, rent paid, or else wages paid, purchases, sales. All these are called operating activities. Investing activities means there should be some kind of asset. That means, for example, I purchase a land or sold a land, building, machinery, furniture. That means if you are invested your amount in anywhere else, that is called investing activities. Last one, financing activities. Financing activities means other than operating and investing. That means you can say, for example, loans taken, issue of share. That means nothing but capital and liabilities. Shares issued, debentures issued, bonds issued, buyback of shares, redemption of debentures, dividend paid. All these are comes under financing activities. So I think you know the concept. Let's solve this question. Classify the following transactions into operating, investing and financing. Issue of equity shares. Tell me, issue of equity shares means, is it operating or investing or financing? Definitely that is not an operating. Why, sir? Operating means that is a regular activity. Does any company every day issues equity shares? Obviously no. So that is not a operating. Is it investing activity? How can you say investing activity? Investing activities means there should be some kind of investment. Actually, this is not an investment. I am issuing shares. How can I? This is investment. In fact, that is a liability. So that is the investing activity. Second one, bonus shares issued. You tell me what is bonus shares issued? I'm damn confident majority of you says that is financing activity, but your answer is absolutely wrong. Issue of bonus shares is not a financing activity. Issue of bonus shares is a non-cash item. Why? Because when a company is issuing bonus shares, that means they are issuing their shares at free of cost. Whenever there is no cash flow, we can't say that is a financing or operating or investing. That is a non-cash item. That is not a financing, not a operating, not a investing activity. Third one, right shares issued. I think we covered right shares issued. I think already we covered this question as our first question in our Super 50 session. Whenever company is going for rights issue, that means company is not giving their shares to their existing shareholders at free of cost. Already we had a question. Their market price is 42 rupees. They are issuing at 11 rupees. That means they are getting some amount from the shareholders. No, definitely that is a activity, cash flow activity. What about bonus issue? In bonus issue, I can't say that is a financing activity. Why? Because there is no cash involvement or cash flows. So that is the reason we have to call particular rights issue share is a financing activity. Next one, point number D. Purchased 90% shares of subsidiary company. So that means our company is purchasing shares in another company. Generally remember one thing. If you are dealing with your own company shares, that is financing activity. If you are dealing with other company shares, that is a investing activity. That's you can remember. Dividend received from subsidiaries. Again, for a dividend, if you are discussing, if you are dealing with your own company, that is a financing activity. For others, that is a operating activity. Dividend received means you are received from some other company. That is investing activity. Dividend received from investments, again investing activity. Payment of license fees. So license fees payment. So definitely license is an intangible asset. You are paying something, that is a investing activity. Next one, royalty received. Royalty received is a regular activity, nothing new, operating activity. Rent received, investing activity. Interest received, investing activity. Dividend paid. Dividend paid means related to others, no? Sorry, related to our own, no? Financing activity. We are paying. Interest paid, financing activity. Acquired assets of a company through issue of equity shares. We purchased some assets. Normally, assets is an investing activity. That is correct. But what happened here? We are not paying cash. Instead of paying cash, we are giving our equity shares. So that is definitely. That means there is no cash movement. So even though there is purchase of asset is there, but there is no cash movement. So that is not an investing, not an operating, not an financing. That is a non-cash item. Next one, purchased goodwill. Purchased goodwill means we purchased some asset, that is a investing activity. Interim dividend paid. Dividend paid already I told you. If it is others, operating. If it is others, investing. If it is own, financing. Dividend paid means we are paying from our company, that is a financing. Sale of investment, obviously investing activity.
Next, come to question number 14. The following is the income statement of XYZ company for the year 2021. So they have given P&L account. Some additional information is given, and they are asking you prepare statement showing amount of cash flow from operations. But don't expect this much of lengthy questions in your exam. They will give you very small questions. Okay. So already you know we can answer in two different ways. Either we can go with direct method or indirect method, depend upon the information in the question. So here we can follow direct method or indirect method, anything is okay, fine. So here everything is clearly given, no? So we can follow direct method. How to solve under direct method? We have to take all operating figures. So for example, cash sales, how much? They have given directly. Total sales are 1,62,700. Out of 70% or credit, that means 30% on cash. We need only cash sales because we are preparing cash flow statement. So into 30% we will get 48,810. At the same time, operating activities means not only cash sales, also we will receive some amount from the debtors, no? So how much amount collected from the debtors? It is decided in the debtors account. We have to open debtors account. You will get 1208. How to open debtors account? No need to follow it. You can simply open debtors account, opening balance, and again sales, any cash received, bad debts, closing balance. So that's how total cash collection from operations. Remaining that payment to suppliers, salaries, insurance, R&D, interest payment. Actually, interest payment is an investing, financing activity. That is not correct. And you will get net cash flow from operations. Don't worry, they will not expect this kind of questions. I have given this question only for the sake of understanding the concept. So this is all about cash flow statement.
Okay, next question number 4. This is from buyback of equity shares chapter. So XYZ Limited has the following capital structure on 31st March 21. Equity share capital 300, reserves, general reserve is there, securities premium, P&L account, export reserve, loan funds are there. The shareholders have on recommendation of board of directors approved special resolution at their meeting as a proposal of buyback maximum permissible equity shares. I think you know, to find out maximum number of buyback permissible shares, it's depend upon 3 tests. Do you remember those 3 tests? What are those 3 tests? Share outstanding test, resource test, debt equity ratio test. They can ask an MCQ. What are those 3 tests? Share outstanding test, resource test, debt equity ratio test. The market price was, however, in the range of 25, and in order to include existing shareholders to offer shares of buyback, it was decided to offer price of 20% above market price. That means our buyback price equals to 25 plus 20%. That means how much? Where is the calci? 25 plus 20%. So 30 rupees is buyback price. Advise the company, they are asking your advice with regarding maximum number of shares that can be bought back. You know, as per section number 69, a company can go for buyback, but the maximum number of buyback is depend upon 3 tests. What are those 3 tests? One is share outstanding test, second one is resource test, third one is debt equity ratio test. First one is share outstanding test. How many number of shares we have as on today? 300 crores is the amount, 10 rupees. That means how many shares? 30 crore shares into 100. So maximum number of shares as per outstanding test equals to, what is the outstanding test? 25% of number of shares. That means 30 crores into 25% equals to 7.5 crores is the maximum number of shares as per share outstanding test. Second one is resource test. As per resource test, how to do it?
paid up share capital. So as per resource test, how to find out paid up share capital plus free reserves by buyback price? You can say paid up share capital plus free reserves into 25% by buyback price. Let's see what is the paid up capital 300. What are the free reserves available? By the way, what is the meaning of free reserves? Free reserves means reserves which are available for distribution of dividend. So 270 general reserve is a free reserve, premium and P&L account. So 270 plus 100 plus 50, 420. So totally 720 is the paid up capital plus free reserve into 25%, 180. 180 is the amount by buyback price 30. So as per second test, we can go maximum buyback for 6 crores. As per first test 7.5, as per second test 6 year. At last but very important third test, debt equity ratio test. What this test says, as per debt equity ratio test, after your buyback, your debt equity ratio should be 2:1, that is post buyback. As of now, our debt is 800 and we have to maintain 2:1. That means after our what you call buyback, our equity should be 400. That means what is the present equity? Present equity is equity means not only share capital including reserves and surplus. So 300 plus these three things. So totally 300 plus 270 plus 100 plus 50. This 720 is called equity. So total present equity 720, but we need to maintain 420. That means maximum we can go for how much? Maximum we can go for 420 minus 720. Correct? Yeah, actually this is 720. So maximum what is the buyback we can go for? 720 minus 400 means we can go for maximum 320. We know the buyback price by 30, 10.67. That means as per test 1, 7 CO, 7.5 CO, test 2, 6 CO, test 3, 10.67. Whichever is lower means we can go for maximum buyback for 6 crore equity shares as per section number 68 of Companies Act 2013. Okay, no? Yeah. Next, coming to question number 1. Personally, I am not expecting question number 1 will be comes in your exam, or you can't expect this question in your main examination. Then the reason why I included this question as a question number 1 means for further chapters, for example for buyback or for forfeiture, for this kind of questions we need this first chapter knowledge. That is the reason I have included this question here. Okay, just I want to explain this question within a minute. So because I don't want to go in detail, because in examination this is not at all important. Come on. On 1st May 21, Superman Limited issued 5,000 equity shares, 100 each, payable as follows. On application 20, on allotment 30, first call 20, final call 30. Applications were received on 15th May 21 for 6,000 shares and allotment made on 1st June. Applications for 2,500 were allotted in full, and those for 3,000 shares were allotted 2,500, and applications for 500 shares were rejected. Some full allotment is there, some rejection is there, some pro rata allotment is also there. Balance of amount due on allotment was received on 15th June. The calls were duly made on 1st July 21 and 1st August 21 respectively. One shareholder did not pay first call money on 150 shares which he had paid with the final call money together with interest at the rate of 5% per annum. Another shareholder 100 shares did not pay final call money at the end of accounting year. Show the cash book and journal entries. So already in regular class we covered this question in detail. This question is very basic question. They are asking mainly journal entries. I think you know what are the journal entries. For example, firstly what happened, company will receive some share application money from the applicants. What is the entry for it? Bank account debit to share application account. Second one, if there is any refund is there, what is the entry? Share application account debit to bank account. Third one, we have to transfer to capital. Share application account debit to share capital. For example, in this question, what happened? Some excess applications are received. We have to adjust in allotment. How many excess applications for the pro rata allotment? 500. Then what is the entry? Bank account debit, share application account debit to share capital to share allotment. At the time of next allotment, you entry share allotment account debit to share capital. Receipt time, bank account debit to share allotment. In first call to share capital. Receipt time, bank to first call. Final call to capital. Receipt time, bank account debit to final call. Everything is easy. You have to just focus on how much arrears and when he is paying. That's it. Okay. Yeah. You can check the answer once. Not big difficulty question. Okay. Yeah. Next, coming to question number 3. The following is the balance sheet of RR Company Limited as on 31st December 21. So they have given issued capital, calls in arrears and 1 lakh equity shares, P&L account, dividend equalization reserve, general reserve, development rebate reserve, capital reserve, securities premium and CRR, current liability total. On asset side, non-current assets, fixed assets, current assets, cash at bank total. The board of directors of the company took the following decisions. Forfeiture of shares is there and fully paid bonus shares is there, and they are converting partly paid to fully paid up, and they are reissuing forfeited shares, and they are issuing dividend, and they are issuing rights issue. So this question is combination of all chapters: issue of shares, rights issue, bonus issue, forfeiture, dividend paid, everything covered in this question. So my dear students, don't expect this question in your main exam. So because for this chapter weightage is 7 marks, they can't ask this question for 7 marks. The reason for why I included this question in Super 50, just for total conceptual clarity. Okay, please go through this question once, because I will take more time for schedule 3 question, that's why. So I'm just skipping this question. Actually already I covered this question in the remaining questions. Okay, yeah. So question number 1, 2, 3 done. Question number 4 completed. Question number 4 completed. Question number 5 also completed. 6 also completed. I think from 7 onwards pending. Question number 7 is pending. It is on? Again it is on forfeiture of shares. Okay. And 8 is also pending. What is the 8th question? It is on prospectus applications, final call. Okay, arrears. Yeah. We can do it, no problem. So let's all of you open question number 6. 6 is completed. No, not it. 6 is completed. Question number 7 we have to do. Question number 7, please, all of you. Give journal entries for the following. So they have given 3 separate questions. We have to answer for those 3. First one, TK Limited forfeited 10,000 equity shares of 10 rupees each for non-payment of first call of 2 rupees and final call of 3 per share. These shares were reissued at a discount of 3.50 per share. So in this question some forfeiture has been made. So forfeiture for non-payment of call money. I think you know, whenever a shareholder fails to pay call money, what is company will do generally? Company will forfeit the shares of that member or shareholder.
By the way, whenever forfeiture is done, for example, you are the shareholder of Reliance Industries Limited. So, for example, issue price is 10 rupees, 8 rupees paid, 2 rupees is unpaid. That means you are not paying that 2 rupees. Definitely what will happen? Whenever you are unable to pay that 2 rupees, company will forfeit your shares. Sir, what about my 8 rupees, sir? When I will get my 8 rupees refund? No, you will not get even single NP as a refund. So that is the concept of forfeiture of shares. Why we should not get refund? That's all I discussed in my marathon. So here our main focus is on problematic part. Come on. So here what happened? We paid some 8 rupees. Unpaid 5 rupees. No, issue price 10. Unpaid 5. That means what is the paid up value? 5. What is the entry then? Question number 7. Correct? Yeah. Question number 7. So we have to firstly cancel the share capital. Share capital account debit. So how many shares I am going to forfeit? 10,000 shares. So 10,000 into 10 rupees issue price. So no, we have to write called up. What is the called up? Fully called up. Then 10,000 into 10. At the same time 2. What is the paid up value? 5 rupees. What is the unpaid value? 5 rupees. Unpaid value normally we already recorded as a calls in arrears. Now we have to cancel that asset. 2 calls in arrears account. How much they paid? 10,000 into 5. Please try to understand why this 10,000 into 5, why this 10,000 into 10. This 10,000 is 10 meant for total called up. This 5 is calls in arrears. Already in due entry we recorded as asset. For example, like bank account debit, calls in arrears account debit to share call. That means already we recorded calls in arrears as an asset. Now we want to cancel the asset. Why? Because there will be no more shares, no more arrears. So still some amount is there, that is 10,000 into 5. That is paid up value, no need to refund. That should be transferred to share forfeited account. So that is our capital profit, we should transfer to capital reserve. So that is our first point. Second point, they are reissuing that share. Reissuing, what is the entry for reissue? But they are reissuing at a discount of 3.50. What is entry for reissue at discount in case of forfeiture? We will get money, right? So bank account debit. How much we are going to receive? 10,000 into 3.5. Discount, for discount we have to use forfeited shares account debit. 6.5. 10,000 into 3.5. 2 share capital. 10,000 into 10. So simple thing, in the place of discount we have to use forfeited shares. So fully shares are reissued. No, here 50,000 is credit and 35,000 is debit. The balance in forfeited shares account should be transferred to capital reserve. Entry forfeited shares account debit to capital reserve. That's it. In the same manner, question number 2 and question number 3. In question number 2, what happened? KP Limited forfeited 20,000 equity shares of 15 each, including 5 rupees per share as a premium for non-payment of final call money of 3 rupees per share. Out of these, 10,000 shares were reissued at a discount of 4 per share. In this problem, here securities premium is there, but securities premium is paid already. We had a discussion. There are 3 cases in forfeiture. Case 1, forfeiture if there is no securities premium. Case 2, forfeiture if there is securities premium and it is unpaid. Case 3, forfeiture, premium is there but paid. For 1 and 3 treatment is same. That means forfeiture of shares is there, but there is no securities premium. Treatment is same as question number 1. Case 3, forfeiture of shares is there. Forfeiture of shares, securities premium is also there, but what happened? That premium is already paid. Then same as case 1, nothing new. So what is the entry for it? Share capital account debit, calls in arrears account debit, to forfeited share. Why you are not writing securities premium here? Already it is received. Why we have to cancel again it? No need. Second one, for reissue, same as case 1, bank account debit, forfeited shares account debit to equity share capital. At third, we have to transfer to capital reserve. How much? Forfeited shares account debit to capital reserve. How much should I transfer? 10,000 shares we are going to reissue. Original amount collected 7 and discount for 30,000. Question number 3. Come on. KP Limited forfeited 15,000 equity shares of 15 each, including 5 per share as a premium for non-payment of allotment money, including premium and first and final call. In this question, this is a case 2 question. That means forfeiture of the shares and there is a securities premium that is unpaid. In that case, what is the entry? We need to cancel securities premium as well. Generally, securities premium is a credit balance. To cancel it, we have to debit it. Then what is the entry? Share capital account debit, securities premium account debit, to calls in arrears, to share forfeited. For reissuing entry is normal, same as case 1 and case 3. Bank account debit to securities, to share capital and to securities premium, and for last one, transfer to capital reserve. What is the entry? Forfeited shares account debit to capital. Here they are issuing at premium. If they are issuing at discount, what is the journal entry? Bank account debit, forfeited shares account debit to share capital. But here what happened? They are issuing at premium. That is okay, fine. And next one, question number 8 is also on forfeiture of shares. You can expect this kind of question for 7 marks. SOS Limited issued a prospectus inviting applications for 6,000 shares of 10 rupees each at a premium of 2 rupees per share, payable as follows. On application 2 rupees, on allotment 5 including premium, on first call 3 and on final call 2 rupees. So 5 plus 2, 7 plus 3, 10 plus 2, 12. That means 2 rupees premium. So I can write here 3 plus 2. Applications were received for 9,000 shares and allotment was made prorate to the applicants of 7,500 shares. That means some prorate allotment is there and the remaining applicants were refused. Okay. Money overpaid on applications were applied towards sums due on allotment. That means we will adjust that amount in allotment cases. D. Mr. D, to whom 100 shares were allotted, failed to pay allotment money and his subsequent failure to pay first call, his shares were forfeited. Z, the holder of 200 shares, failed to pay both the calls and his shares forfeited after the second and final call. The requirement is, of these shares forfeited, 200 shares were sold to C and 8.5 per share. You have to write journal entries for the above transactions. So firstly, what happened? Tell me. Firstly, we are issuing shares. No. What is the entry for it? For firstly, bank account debit to share application account. How many applications we are received? 9,000. 9,000 into 2 rupees. I will solve this question for you. What is the question number, by the way? Question number 8. So on application, on allotment, on first call, on final call. Tell me how much on application, how much on allotment, how much on first call, how much on final call. On application 2 rupees, on allotment 3 plus 2, on first call
3, final call 2, 2 plus 3, 5 plus 3, 8 plus 2, 10 plus 2, 12, fine. So firstly, we received application money. What is entry for application money received? Bank account debit. 2, share application account. So tell me how many shares are subscribed by the public? 9,000 shares into what is the application money? 2 rupees. That means how much money we received? 9,000 into 2 means 18,000. Next, what happened? For 7,500 shares pro rata. That means how remaining applications were received. Remaining applications means 1,500. You have to refund the money. What is entry for refund? Reverse entry. What is the reverse entry? Share application account debit. 2, bank. How much should I refund? How many shares we are refunding? 1,500 shares, correct? Yeah, 1,500 into 2. That means 3,000 I am going to refund. So, application receipt entry is recorded, and second one, what you call? Refund is also the third one. We have to transfer share application to share capital. So what is the entry for it? Share application account debit. 2, share capital. But we are issued only 6,000 shares. That means we can maximum allot 6,000 shares. 6,000 into 2 rupees. 2 na 3 na? 2 only. 6,000 into 2. 12,000. But in my application account, out of 18,000, 3,000 is cancelled. Still 15,000 is there, no? So here I have to debit 15,000. But on credit I can allot only up to 12,000. What about remaining 3,000? This remaining 3,000 is I received extra as on the time of application. Definitely I can't use this money. Actually I'll use this money for the future allotment. So I have to transfer to share allotment account. Now you can observe application account 18,000 credit, 3,000 debit, 15,000 debit, tallied, closed. So what happened? Next one, point number 4. What is the point number 4 after application? We have to write allotment due. What is entry for allotment due? Share allotment account debit to share capital. So tell me, what is the number of shares we issued? 6,000, but premium is also there, no? You have to write 2 securities premium. Share allotment means 6,000 into 5, 30,000. Share capital means 6,000 into 3, 18,000. Premium means 6,000 into 2, 12,000. I think there is no failure on allotment. Yeah, no, yes, yes, some failure is there, nothing but D. What about Z? He failed to pay both the calls. Okay, fine. So that means how much I am going to receive on allotment? Actually, how much I have to receive? I have to receive actually 30,000, correct? So, but one person is there, that person name is Mr. D. He is not paying allotment money. So listen. That means how much money I am going to receive? So totally how many shares? 6,000 shares. But I am receiving only money from 5,900 shares. 5,900 shares into how much actually I have to receive? 5,900 into 5, correct? That means 5,900 into 5. That means 29,500 is receiving, but still don't expect that much amount from the shareholder. Why? Because already they paid extra amount at the time of allotment only. How much? 3,000. So actually the original amount receivable is 5,900 into 5, 29,500, but already we received at the time of application. So the balance amount receivable is 26,500. Out of this, one person is not paying. Who is that? He is holder of 100 shares. 100 into 5, 500, but he is already some excess money paid at the time of application, right? How much shares? For 7,500 shares you allotted 6,000 shares. For D you allotted 100 shares. Means how many shares he applied for? 100 by 6,000 into 7,500. He applied for 125 shares. That means already we received excess money at the time of application. 25 into 2, 50. That means he will pay only the arrears is 450, not entire amount. So what is the entry? Listen carefully. Entry number 5, bank account debit, calls in arrears account debit to share allotment account. So 450 is calls in arrears. How much share allotment account? 30,000 minus 3,000, 27,000. That means I am going to receive 27,000, not minus 450. Yeah, 27,000 minus 450, 26,550. Here important is this calls in arrears. Now what happened after that? We are going to forfeit after first call. What is entry for first call due? Share first call account debit to share capital. First call account debit to share capital. Next one, bank account debit to first call. After that, forfeiture. In forfeiture, same as previous problem, question number 7. So you can observe same entries, calls in arrears. You can see this is entry for forfeiture. Already we covered in the previous problem. Sorry, share capital account debit, securities premium account debit to calls in arrears to forfeited shares. So same as previous problem. That's it. Everything same as what we discussed. But here this is important, how to get this 450. How to get, for 7,500 you allotted 600 shares, right? But D allotted 100 shares, means how many shares he applied? 100 by 6,000 into 7,000. That means he applied for 125 shares. That means extra he applied for 25 shares. So actually we have to refund his application money 50, but we have not refunded. So we have to deduct it from there. Okay, that is your question number 8. Next, come to question number 10. Question number 10 is about cancellation of our own debentures. A company purchased its own 12% debentures in the open market for 25 lakhs. That means a company is there, that company is purchasing their own debentures. Sir, is it possible? Practically, yes, it is possible. A company can purchase their own debentures, no problem at all. There is no restriction on it. Okay. The interest amount included in the purchase price is 75,000. The face value of the debentures purchased is 26 lakhs. The company immediately cancelled the debentures, so purchased. Pass the journal entries to record the purchase and immediate cancellation, ignoring the DRR and nothing else. So first of all, you have to write entries. Whenever you are cancelling those debentures, what is the journal entry? Come on. First of all, interest amount included in the purchase price is 75,000.
So what is the entry for interest payment normally? Interest account debit to bank account, same entry. Before that I have to add one more word called debenture interest account debit to bank account. So now what happened? We are selling at the time of purchase. What can you write?
For example, own debentures account debit to bank account. Okay, no? Yeah.
So whenever you are cancelling your debentures, what is the entry? Debentures account debit to bank. So, but unfortunately what happened? You are purchasing your debentures at 26 lakh. So 12% debentures 26 lakh. But how much we are paying? So to bank 24 lakh. How you got 24 lakh 25,000? 25 lakh minus 75. 24 lakh 25. So that's what we are paying. The balance amount would be the profit. What is the profit? You can say 26 lakh minus 24 lakh 25,000. Nothing but 1 lakh 75 would be the your profit. So coming to last entry, whenever you got profit on cancellation of your debenture, it should be transferred to capital reserve. Why? Because that is your capital profit. I think you know the difference between capital profit and revenue profit. Capital profit is in the nature of capital, nothing but it is not a kind of sale of goods or sale of services. That is the reason you have to transfer to capital reserve. This is what question number 10. Question number 11 is already covered, underwriting, right? And coming to question number 12, it is also covered with respect to what is that? Goodwill and promoters, correct?
13 covered, 14th also covered, cash flow statement, and question number 15 onwards we have to discuss. 15 and 16 are very very important questions. Why? Because these questions are from schedule 3. You can expect a 14 mark question from this area. And 17 is covered anyway because this is from banking companies. 18 is also covered banking again. 19 is covered banking. And 20 is also covered from banking companies. And 21 is also covered from electricity. This is. And 22 is also from electricity is covered. 23 is also covered. And 24 is insurance we covered. 25 is from insurance we covered. And 26 is from Ind AS 2 we covered, and 27 is from Ind AS 10 we covered, 28 is from Ind AS 19 we covered, 29 is also from 19 we covered, 30 is from Ind AS 19 we covered, 31 is from Ind AS 33, and 32 is also from 33, 33 is also from Ind AS 33, 34 is from Ind AS 37 we covered. So out of corporate accounting 34 questions, only 2 questions are pending. Those are from schedule 3. So let's discuss those 2 questions. You can expect question from this schedule 3 chapter, which consists of 14 marks, very very important. So let's start schedule 3 concept. In schedule 3, generally they'll test 14 marks question for sure, no doubt in that. In each and every attempt they are testing a question from schedule 3 for 14 marks. Sir, what about our attempt? For your attempt also, definitely you will get a 14 marks question from schedule 3. Sir, question will be like, you have to prepare profit and loss account and balance sheet. So, but sir, I know P&L account and balance sheet because I am expecting preparation of final accounts in my foundation and intergroup fund financial accounting paper. That's already I know. What is the specialty? Here specialty is we have to prepare P&L account and balance sheet of the company, not of sole proprietorship or partnership. So in company, the format will be completely changed when compared to sole proprietorship or partnership. Normally, what is balance sheet or P&L format in our sole proprietorship or partnership? We will write in a T-shape. Debit side, we will write expenses and losses. Credit side, incomes and gains. On assets and balance sheet, we will write on left side capital and liabilities, on right side assets. Correct? But coming to company schedule 3 format, the format is in vertical shape, not in horizontal shape. So how to do it? Let's solve question number 16. Then you will get more clarity with respect to question number 16. So question number 16, come to question number 16 all of you. Yes.
ABC Limited provides the following trial balance as on 31st March 2017. They have given trial balance and share capital, debentures, motor van, machinery, land and building, 12% long-term government securities, sales returns, interest on debentures, purchase returns, opening stock, discount, carries outward, rent and rates, income from government securities, trade receivables, trade payables, advertisement, bad debts, salaries, miscellaneous expenditure, contribution to PF and gratuity, cash at bank and cash in hand. In additional information, closing stock is given, depreciation on machinery 20%, vehicle 10%, land and building 5%, miscellaneous expenditure 20,000 as audit fee, interest on debentures payable quarterly, and the last interest is to be paid, that is payable interest outstanding. Trade receivables includes a sum of 25,000 due from Mr. X, who has become insolvent, and 25 paisa in a rupee is expected to be recoverable from him. And point number 6, create a provision for doubtful debt at the rate of 2% on trade receivables. Point number 7, income tax provision 1,50,000. What is the question requirement? Prepare a statement of profit and loss for the year ended 31st March 2017 and balance sheet as on the same date. Firstly, we should prepare statement of profit and loss. What is the format for statement and profit and loss? My dear students, please remember one thing. If they are, definitely they will give you a question from this chapter. So please don't worry. So definitely you can get easily 10 out of 14 marks. If you need 10 out of 14 marks, just stop this video, go to my marathon. Clearly I discussed how to get 10 out of 14. Here I can't discuss everything because this is a super 50 session. You can go there, definitely it will be helpful to you a lot. Even you can watch my 6 months back marathon. That is, in that video also I covered in detail. But that is in both the videos are in Telugu version, of course, but still you can understand how to write the format. Okay, for format you will get some number of marks. Then I told you what is the step number 1, step number 2, how to do all those procedure. So in P&L account format, majorly there are 2 heads, incomes, expenses. In income side only 2 heads. First one is revenue from operations, second one is other income. Revenue from operations means main revenue from sale of goods and sale of services, and other income means whatever you are getting other than selling of goods and services. Whatever can I get? What else I can get? That might be interest on investment, that might be rent received, dividend received, discount received, brokerage received. Whatever you are getting other than sales, you have to write in other income. Commission received, discount received, brokerage received, dividend received, interest. If you receive anything other than sales, you have to write under other income. That much easy. Interest, incomes, not interest. And expenses, we have to write 7 items. What is that? What you call raw material consumed, changes in inventory, purchases, D for depreciation, E for employee benefit expenses, F for finance cost, nothing but interest and other expenses. And you have to write profit before exceptional and extraordinary items, but happiest thing is there will be no exceptional and no extraordinary items in our questions usually, and we have to show separately continuing, discontinuing, that is not at all required. Yeah, that's it. Let's come on to the question. First one, revenue from operations. You tell me, my dear students, revenue from operations means what is our principal source of revenue? Nothing but sales only. Go to your trial balance, tell me your sales, but you have to write net amount after reducing sales return. What is the sales amount?
Where is the sales? Yes, sales and sales returns. That means 60 lakh minus 3 lakhs, 57 lakhs. Correct. Second one, other income. Apart from sales, is there any other income is there? Check it out. Other income is there. Share capital, debentures, machinery, not income. Interest on debentures. That means that is expenditure, not income. Purchases. After purchases, what is the next item? Purchase returns, opening stock, discount, carries outward, rent or rates. This is income, no? Income from government securities. That is comes under other income, obviously. Apart from it, trade receivables, asset, trade payables, liability, advertisement, expenditure, bad debt loss, salaries expenditure, miscellaneous expenditure, contribution to PF and gratuity comes under expenditure, cash at bank, asset. That means there is only one other income, that is income from government securities, 24,000. So our income side is completed. 57 lakh plus 24, 57 lakh 24. That's it, done. On expenses side we have to write purchases. That to net purchases. Net purchases means purchases less returns. You can see here purchases 36 lakh, purchase returns 4 lakh. That means 34 lakh minus 2 lakhs means 34 lakhs means 32 lakhs. At the same time, changes in inventory. Changes in inventory means opening minus closing. Next one, DEF. DEF stands for depreciation, employee benefit expenses, finance cost. What is employee benefit expenses? It consists of salaries, wages, contribution to PF, gratuity and all those things. Tell me, is there any salaries in the question? Salaries, I think salaries is there. Yeah, salaries is 6 lakh 72,000. No wages, but contribution to PF is there. How much? 1 lakh. That means 6 lakh 72,000 plus 1 lakh 7 lakh 72,000. Next one, D for depreciation. Already they have clearly given depreciation on vehicle, machinery, land and building. What is the vehicle value? Check it out. Vehicle 10%, machinery 20%, land and building 5%. Vehicle 10%, that means 4 lakh into 10%, 40,000. Correct. Machinery how much? 20%, right? 20%. What is the machinery value? 20 lakh into 20%, 4 lakh. Land and building 5%, 12 lakh into 5%. 12 lakh into 5% means 60,000. Correct? So tell me total amount. 4 lakh 40 plus 65 lakh is depreciation. Is it correct? 5 lakh? Yes, we are correct. Next one, the pending one is finance cost, F. Finance cost is nothing but interest. Interest on debentures or loans. We have debentures, right? You can check it out in your P&L account or what you call trial balance. 12% long term, that is investment, no? Debentures, yeah, you can see here 10% debentures 3 lakh. That means what is the interest? 3 lakh into 10%, nothing but 30,000 is your interest. Interest is called as finance cost. So here finance cost is 30,000. So we pending one is other expenses. Apart from purchases, change in inventory, depreciation, employee benefit expenses and finance cost, what are the pending? You have to all treat it as a other expenses. Consider all those things and sum up it. You will get 4,45,750. So now we got total income and total expenses. Reduce it and after that reduce the tax they have given. This is the profit. Then firstly write the entire format and slowly apply each and every point. So second one is balance sheet. So my dear students, very important you have to remember the format of balance sheet. Sir, what is the format of balance sheet, sir? Very easy. There are only two heads. One is equity and liability. Second one is assets. Under equity and liabilities, we have to write mainly 4 subheads. What are those 4 subheads? Shareholder funds, share application money pending allotment, non-current liabilities, current liabilities. On shareholder funds, again we have to, what are the two? Share capital, reserves and surplus. So no subheads in 2 and 3. Actually in 4 we have to write some more things. Yeah. Actually 3 and 4 are as same as our normal sole proprietor and partnership accounting. On asset side only 2 non-current assets, current assets, that's it, done. Okay. So share capital is already given in the trial balance because there is no rights issue, no bonus issue, no redemption, no buyback. So we can directly write directly share capital in the trial balance. That is nothing but 35 lakh. So we can directly substitute. So figure in the trial balance nothing but 35 lakh in our balance sheet. Apart from that, reserves and surplus are pending. So definitely this is a very difficulty point while solving schedule 3 question. So always, my dear students, remember one thing, keep reserves and surplus at a last point. So if your balance sheet is not get tallied, take it as a balancing figure. Next one, share application money pending allotment, nothing is given, no, just leave it. So non-current liabilities, nothing but long-term liabilities. What are the long-term liabilities in the question? I think we have some amount of debentures, right? Tell me, debentures means is it current or non-current? Obviously non-current, long-term only. So you have to write under non-current liabilities 10% debentures, nothing but 3 lakh rupees. That is also done. The rest is current liabilities. Under current liabilities, what are the items you have to write? Nothing but trade payables, outstanding interest, provision for tax, total amount, done. So second main head is assets. Under assets side only 2 subheads. What are those 2 subheads? Non-current assets, current assets. Non-current assets means you have to write all your machinery. I think some motor car is there, right? Motor car, machinery, furniture and all those things. And under current assets side you have to write your inventory, trade receivables, cash and cash equivalents. So just post it. But while you are writing fixed assets, don't forget to reduce depreciation. I think we already calculated somewhere else, no? I think in P&L account, yes, right. In P&L account, at the time of calculating D for depreciation, there we found out depreciation. Just take the gross figure from your trial balance and reduce depreciation, write the net figure in your balance sheet. After that, your balance sheet is almost get tallied. The pending one is current assets. Current assets means you have to write inventory, nothing but closing stock, don't write opening stock, and trade receivables, cash in hand. Your balance sheet on asset side and liability side are both are equal. So definitely you will get 14 by 14 by solving schedule 3 question. And try to remember, my dear students, don't expect your balance sheet will get tally in your main examination, because that is not at all easy task. Because the main problem is time is very limited in your main exam, and always your focus is on Ind AS and banking, electricity, insurance, no? So please try to allocate at least 30 minutes for this chapter. So question number 17 also completed. So I think with this question, total corporate accounting 34 questions are completed. So remaining 16 questions are from audit. So I will start audit. Okay, so just pause the video and go back. So I will tell you what are the important areas you have to cover. So first, highest priority should give to please banking companies, electricity companies and insurance companies. From this you will get 16 marks. And second priority, please give to Indian accounting standards Ind AS, you will get 9 marks. And third priority, please give to cash flow statement, you will get 7 marks. And fourth priority, give to schedule 3, you will get 16 marks. That means 16 plus 9, 25 plus 7, 32 plus 16, 48 marks out of 50, only 4 chapters. So after that I will tell you how to prepare audit subject. Yeah, bye.
Okay, so it's time to discuss audit. Corporate accounting is completed, audit. Generally, students ignore audit subject. Mainly they focus on corporate accounting part. But the reality is, in your main exam, Both are equally important. In fact, in MCQ part, out of 15 MCQs, frequently they are testing 10 MCQs from audit. Sometimes 8 or 9. In maximum cases, they are giving 10 MCQs out of 15 MCQs from audit only. Coming to descriptive part, 3 questions. Question number 6, 7 and 8. Those 3 questions are from audit. So if you prepare well, of course you can write descriptive part, and same concept will be helpful to answer MCQs as well. The most happiest thing in audit is if you prepare perfectly in descriptive, or if you are perfect with the theoretical part, definitely you can score in MCQ out of 20 out of 20 if they have given 10 MCQs. Okay, so let me start audit part. Sir, what are the important chapters in audit? All those are covered in my marathon, but here I am discuss the 14 to 15 questions whatever I picked up under Super 50. Okay, come on. First one, discuss basic principles governing an audit as per SA 200. So they are asking what are the basic principles governing an audit. That means when a person is appointed as an auditor, what are the minimum principle he has to comply. So I think there is second chapter called auditing standards or standards on auditing. Some list is there, SA 200 to SA 800 and SA 2000 and 3000 and 4000 series. That chapter is important for MCQ. There I covered SA 200. SA 200 is for overall objective of auditor. There they have covered these basic principles governing an audit. Come on. So basic principles governing an audit. First one, integrity, objectivity and independence. Second one, confidentiality. Third one, skills and competence. Fourth one, work performed by others. Fifth one, documentation. Sixth one, planning. Seventh one, audit evidence. So first one, integrity, objectivity and independence. That means integrity means auditor always should be straightforward, honest and sincere, and he should be impartial. That means whenever you are appointed as an auditor of any company, definitely you should follow some principles, basic principles. Out of the first fundamental principle is you have to be integral. You have to maintain integrity and independence and objectivity. Sir, what does it mean of integrity, objectivity and independence, sir? That means you should be honest, straightforward and sincere, and you should be impartial. Second one, confidentiality, a very, very most required condition if you are appointed as an auditor. Actually, if you ask me personally, confidentiality is not only a requirement or basic principle for the auditor, even everybody should maintain confidentiality. Whenever some person is sharing information with you which is confidential, you should not disclose to someone else. Okay? Being an auditor of a company, definitely you will get to know lot of data about a company. You will get to know how they are purchasing, from where they are purchasing, who are their supplier, from where they are manufacturing, who are their major customer, from where they are getting principal revenue, everything. Definitely that's what you can identify in their documents. Definitely you will let you know all the information. If you share that information to his competitor or their competitor, definitely they will correct all of this as his own mistakes. Then there will be huge competing effect on your client. So you should not disclose any confidential information of the auditor. That's what covered in SA 200. Sometimes, for example,
court or else law may requires, the court is asking you to please tell us information about your client, then you have to do. If it is a court or legal or regulatory requirement, you have to disclose that information. But normally, without consent of your client, you should not disclose any information to anybody. If client has given consent, then you can disclose information to anybody, that is okay. That means there is the only two scenarios where you can disclose the information of the client. Number one, if there is a legal requirement. Number two, if you have consent of client. Number three, skill and competence. Definitely, auditor on his own he can't do entire audit. Definitely he will take the help of audit staff or article assistants. Audit staff or article assistants means actually you will be the future audit assistants and article assistants. After completion of your group 1 or group 2, definitely you will join for apprenticeship, no, nothing but articleship. Then you have to be called as audit assistants or article assistants. So definitely your audit assistants and article assistants should be adequately trained, experienced and competent person. All of your auditors or article assistant should be properly trained, experienced and competent persons. That's what you have to check, whether my staff are properly experienced, trained or competent or not. If they are not properly trained, you have to train them, and if they are not competent person, you have to just replace with them the proper competent person. Number 4, work performed by others. For example, I am the auditor of Reliance Industries Limited. Actually, I have 3 audit staffs, Mr. X, Mr. Y and Mr. Z. So they conducted the audit and I signed the audit report. Audit is completed. After 6 months, there is some scam in RIL, Reliance Industries Limited. Now I am simply escaping that. Actually, work done by Mr. X, Mr. Y and Mr. Z, I am not at all responsible for that. I can't escape just saying I am not responsible for the work performed by the X, Y and Z. Even though work performed by the X, Y and Z, you are the responsible. So you are always responsible, even though work is delegated by the auditor to the audit staff. That's what they are going to explain. Have a look. The auditor remains responsible for the work delegated by him. Even though work is delegated by the auditor to his staff, he is still responsible for it. Next one, documentation. Already I told this point in SA 230. If you remember the standards, SA 230 is documentation. The proper working paper should be maintained by the auditor to evidence the audit work. For example, while conducting the audit, auditor has to plan his audit and he has to he has to comply his procedure. After that, he has to collect the evidence. That evidence should be sufficient and appropriate, and before reaching conclusion or before forming opinion, he will come to some conclusions. So all these things should be documented. Those working papers are called documentation. Every auditor should maintain his working papers at least for 7 years. Important for MCQ. Next one, planning. The auditor should obtain NTE of audit procedures. That's what we covered just now. First, auditor should plan his audit, then he will comply his procedure. So audit plan means you have to determine NTE, N for nature, T for timing, E for extent of audit procedure. Last one, audit evidence. Audit evidence should be sufficient and appropriate. Next one, accounting system and internal control. Actually, for 7 marks you can ignore up to audit evidence. If you want, you can add 2 more things. How you conclusions and how you are reporting it. Just I will read it once. Accounting system and internal controls. An understanding of accounting system and the record of internal control helps in determining nature, timing and extent of audit procedures. Similar to the previous point, here we are focusing on internal control system. Last one, audit conclusions and reporting. On the basis of conclusions drawn from the audit evidence obtained, the auditor should give unqualified report or qualified report or adverse report or disclaimer report. I think already you know types of reports. There are different types of reports. We can say unqualified, qualified or unmodified, modified. Unqualified or unmodified means positive opinion. Qualified or modified means negative opinion or negative report. Again, under modified or qualified, there are three bifurcations are there, like qualified report, adverse report, disclaimer report. So this is the basic principles governing an audit. Tell me what are those? Integrity, objectivity, independence, confidentiality, skills and competence, work performed by the others, documentation, planning, evidence, accounting system and internal controls, and finally audit conclusions and reporting. These all are called basic principles governing an audit. Okay. Next question. Repeatedly they are testing this question in MCQs and sometimes in descriptive question as well as a theory question. The question is about permanent and current audit file. Majority time they are asking MCQ. First of all, before discussing this question, let me tell you background of this question. Okay, then we can explain this question. Already we covered. So just to give opinion of the auditor, firstly he should plan his audit. So firstly, auditor should plan his audit. After plan, there should be audit procedures. So from audit procedure, he will obtain audit evidence. Based on evidence, he will come to audit conclusions. Based on conclusion, he will form a audit opinion. Based on opinion, he will draft audit report. This is the total procedure or total cycle of audit. So while collecting audit evidence, his audit evidence always should be sufficient and appropriate audit evidence. This term is very, very important in audit. Sufficient and appropriate audit evidence. Sufficient means it should be called quantity. Quantity wise it should be enough to come to conclusion. Appropriateness means quality. Quality means it is what you call appropriateness, or we can say how much quality data you are collecting. So your audit evidence should always be both sufficient and appropriate. Okay? Yeah. So then the point is, this total audit evidence, whenever they collected evidence, they divided into, or you can say evidence is also called as audit documentation or audit working papers. So again they divided this total working papers into two categories. One is permanent audit file, second one is current audit file. So simply we can say, as per SA 230 audit documentation, auditor has to maintain proper documentation. So out of those total audit files, again we can bifurcate the total files into two categories. What are those two categories? Permanent audit file and current audit file. So let's see what are the comes under permanent audit file, what are the comes under current audit file. In permanent audit file, legal and structure of the entity, legal and organizational structure of the entity. In current audit file, like first let's cover total permanent, then we'll move on to current audit file. So one thing remember, my students, permanent audit files generally it covers documents which are important in nature, which are not only relevant to the particular year. those kind of documents or files, will call it under permanent audit file. For example, you can see the first point, legal and organizational structure of the entity. Legal and structure of the entity. That means if you are a partnership firm, you need some partnership deed. That is called legal form. If you are a company, you will have MOA or AOA, nothing but Memorandum of Association and Articles of Association. So if you are a trust, you will have trust deed. So these kind of files or what you call documents will file under a permanent audit file, because MOA and AOA is not only relevant for only one particular year, it is relevant for throughout the life of company or life of entity. Second one, extracts or copies of legal document, agreements and minutes relevant to the audit. So whatever the what you call audit related matters, so those total minutes are comes under permanent audit file. Number 3, a record of study and evaluation of internal controls. Definitely there may be some internal controls are there. Generally every company or every entity, internal controls are almost same for first previous year to next year. That means they can't change internal controls each and every year. Generally they are same from one year to next year. So definitely as an auditor you should verify or evaluate their internal control system. So every year, so whenever you recorded or you studied or you evaluated, all those should be documented. That is called permanent audit file. Next one, analysis of significant ratios and trends. Definitely there may be some kind of ratios in that company. You have to analyze it. For example, you have to analyze current ratio or quick ratio. All these analysis comes under permanent audit file only. At the same time, so previous year audited financial statements are also comes under permanent audit file. Next one, notes regarding significant accounting policies. This is AS1. So you know in AS1 in your group 1 financial accounting, so AS1 means it's discussed about accounting policies. So that is comes under permanent audit file. Coming to the next part, current audit file. Current audit file means it covers majority documents which are related to the only 1 year. Let's see what are those. Correspondence relating to the annual reappointment. Whenever you are annually reappointed year by year, that is relevant to only for that particular year, not for the previous year or next year. Next one, extracts of important matters in the minutes of board meeting and general meeting relevant to the audit. So both the points are looks like a same, but both are not same. This is important matters, this is normal extracts. Number 3, copies of management letters. By the way, do you know what is the meaning of management letters? Management letter means definitely there should be a proper communication between management and auditor, but it should always be through letters or through kind of documentation. Whatever the documentation which are forwarded from the management auditor is called management letter. So if you received any letter from the management, it should be filed as a current audit file, not a permanent audit file. Why? Because you received a particular letter from the management relevant to the current year audit, not for the previous or next year audits. That is the reason that is covered under a current audit file, not as a permanent audit file. And next one, analysis of transactions and balances. I think you know transactions means they are discussing about trading or P&L. Balance means they are discussing about balance sheet. If you are analyzing any transaction or balance, that means you are discussing about a particular year. That means you are discussing about either P&L or balance sheet of the current year, not for the entire organization. So that is also comes under current audit file. Next one, copies of
communication with other auditors, experts and third party. If you are communicating with any third party, sir, who are the third party, sir? You may communicate with your creditors of the client or debtors of the client or bankers, or you may communicate with the experts, or you communicate with any other parties, or sometimes you may communicate with the other auditors in case of branch auditor or joint auditor. So any communication during within the entity or within the auditor and auditor or expert, anybody, if there is any communication between auditor and the third party, you should file it as a current audit file. And next one, audit program. Audit program means it is a detailed audit plan. This is also current audit file. So this is the major difference between permanent audit file and current audit file. So this is question number 36. So question number 37, discuss the various methods of obtaining audit evidence. How will you assess reliability of audit evidence? So various methods of audit evidence. Again, standard number. Tell me what is the standard number of audit evidence? 230. 230 is documentation. 530 is sampling. What is standard number of evidence? SA 500 is audit evidence. 501 evidence for specific or selected items. Okay? Definitely, as I told you already, definitely you should always get audit evidence that should be sufficient and appropriate. But sir, how to get audit evidence, sir? Auditor has to conduct some procedures to obtain audit evidence. That is okay. But how it is possible to get evidence? What are the methods available to collect audit evidence? That is the present question. So there are several methods. By following those methods, you can obtain audit evidence. Out of those, first one, inspection. Second one, observation. Third one, external confirmation. Fourth one, recalculation. Fifth one, reperformance. Sixth one, analytical procedure. Seventh one, inquiry. So these 7 are methods for obtaining audit evidence. This question is very, very important in descriptive theory part. They may ask this question as for 7 marks. What is it? Different methods for obtaining audit evidence. Let's see what are those methods. First one, inspection. Inspection means it means examining. Examining means verifying or checking what records or documents. Already I highlighted important words in red color. Examining records or documents, whether internal or external, in a paper form or any other form, any physical verification of tangible assets. So simply, inspection means we have to verify records or documents. That is called inspection. So by inspecting any documents or records, you may get some evidence. Second one, observation. Observation means in inspection we have to do some work. We have to examine or verify records or documents. But coming to observation, no need to examine or verify anything else. In fact, you have to do nothing. You have to observe, or you have to look at the process being performed by the others. That means you are witnessing the work done by the others. That is called observation. In observation, you have to do nothing except witnessing. Means looking at the process or procedure being performed by the others. We have to just look at or witnessing the process being performed by the others. Next one, external confirmation. A name itself tell you external confirmation. External means it is outsider's confirmation. External confirmation represents audit evidence obtained by the auditor as a direct written response from a third party, either in paper form or electronic form or any other
medium. That means we are getting confirmation from a third party. That is called external confirmation. Sir, give me an example, sir. Sure. For example, you are auditing some Reliance Industries Limited or some TCS. So you have observed one item called bank loans 10 lakhs or 10 crores. So now you have, I think you got some doubt whether this amount is correct or not. Then you may ask, call SBI Bank and Punjab National Bank just to confirm is it correct or not. That is called external confirmation. Next one, recalculation. Recalculation means as an auditor, you should sit and calculate the total mathematical accuracy, arithmetical accuracy. You have to recalculate the entire calculation part. So recalculation consists of checking mathematical accuracy or arithmetical accuracy. Next one, reperformance. Reperformance means you have to execute again audit procedures. Next one, analytical procedures. SA 520 is analytical procedure. It means you have to study or analyze possible relationship among both financial and non-financial data. That means you have to compare financial data and non-financial data. That is called analytical procedures, SA 520. Now last one, inquiry. Inquiry means just asking information. It may be financial or non-financial. It may be from insiders or outsider. It may be knowledgeable persons or not. So inquiry consists of seeking means asking. Seeking information both financial and non-financial from knowledgeable person who has knowledge within or outside the entity. It may be formal written to informal oral. Okay, this is very what you call important question for your exam. That is various methods for obtaining audit evidence. What are those? Inspection, observation, external confirmation, recalculation, reperformance, analytical procedures, at last inquiry. Okay, so next question is question number 38. An auditor applies various techniques to evaluate internal control system of the organization discussed. That means we know auditor has to evaluate internal control system. So in evaluating internal control system, we have some techniques to evaluate internal control system. So they are asking you elaborate or discuss about this techniques of evaluation of internal control system. Simply we can say how an auditor can evaluate internal control system. So these are some techniques to evaluate internal control system. Let's see. First one, narrative record. Second one, checklist. Third one, flowchart. Fifth one, questionnaire. These four are called techniques for evaluation of internal control system. First one is narrative record. Name itself indicates narrative records means it is a descriptive format. It is in a paragraph text format. It consists of complete description or details how our internal control system is. Let's see. It is a complete and exhaustive description of the system. So complete how our system is clearly written in that particular what you call document is called narrative record. It is appropriate in circumstances where formal control system is lacking. Like in case of small business groups, small businesses gaps in control system are difficult to identify. So obviously, when you are evaluating very small business enterprise, the narrative record may not work out. Why? Because narrative record means it is a complete full text format, document format. It is not easy to understand. Okay? So you can remember highlighted word which is in red color. Narrative record means it is a complete and exhaustive description of the system. Second one is checklist. Name itself indicates it consists of some questions we have to check whether we followed or not.
Based upon that, we can evaluate how strength or how weak internal control system is. It is a series of instructions that a member of the audit staff is required to follow. That means it is a series of questions which audit staff should follow. They have to be signed or initialed by the audit assistant as a proof of having followed the instructions given. So, checklist is a series of questions, and so it is to be followed by the audit staff. In fact, it is prepared by the auditor. So audit staff, he has to verify each and every question. He has to initial or sign it, whether you followed or not. For example, it may consist of, have you verified internal control systems in what you call computer CAT, or whether you verified internal control system through CC cameras, or whether you verified proper security guard is there. So audit staff has to sign or initial at each and every point. So remember one thing, checklist is prepared by the auditor. It should be followed or answered by the audit staff. That means checklist is in between auditor and audit staff. There is no involvement of management or client or company.
So third one, flow chart. It is a pictorial representation. Flow chart is a pictorial representation of the internal control system. Actually, out of these four techniques, narrative record, checklist, flowchart, questionnaire, flowchart is easily understandable manner. Why? Because if you open narrative record, it consists of the total text in the form of paragraphs in document. Coming to checklist, it is a kind of series of questions we have to check. That means audit staff has to check whether you followed or not, and you have to sign on it. That means that is a proof of whether you signed, whether you verified or not. But coming to flowchart, it is total, whatever the control system is there, we will explain the total control system in just a flowchart or else a picture paragraph. And definitely, whenever you are converting one text into flowchart or a flowchart, definitely we have to concise the content as much as possible. But that concise should not disturb or deviate the main core content of the subject. I think generally in your law and audit, generally students use it to prepare flowcharts, correct? So whenever you are preparing flowchart, you have to concise the context, but that concise should not deviate the main subject, main content of the particular provision. If you dump entire context into the flowchart, definitely I can't call it as a flowchart. Flowchart and narrative record both are same. So definitely whenever you are preparing flowchart, it should be as much as concise, but it should depict nothing but explains everything. Come on. It is a pictorial representation of internal control system. Depicting means explaining various elements such as what are operations, what are our processes, what are our control, which helps in giving a concise and comprehensive view of the organizations. So definitely flowchart will give concise and overall, comprehensive means overall view of the organizations. Last one, internal control questionnaire. Generally, many students are confusing about checklist and questionnaire. They both are looks like the same, but they are not same. Have a look. It is most widely used method, obviously, again important for MCQ. Most widely used method is internal control questionnaire for collecting information. Obviously, think once, actually you are an auditor, you are not an employee of the organization, and your audit staff also, your employees, they are not employees of the entity or your client. But you are evaluating internal control system of the company or your client. Then how to evaluate? Definitely you have to collect information from the entity only. If you ask information from your audit staff, what will happen? Even he don't know anything. Are you getting my point? So obviously, whenever
If you want to evaluate internal control system, that means you want to know more about internal control system, you have to ask them only in the form of questions. So that is the reason most widely, that means so many people are using internal control questionnaire method. In this method, what happened? Auditor will frame the questions, then client employees or client will give the answers, either yes or no or not applicable, whatever it is. So checklist is in between auditor and audit staff, questionnaire is in between auditor and client employees. Okay, so with this we covered our techniques for evaluation of internal control system. What are those? Narrative record, checklist and flowchart internal control questionnaire. Sir, tell me some keywords in each and every particular technique. Definitely. So coming to narrative record, what is the important? It is a complete and exhaustive description of the system. What is important in checklist? It is a series of questions audit staff should follow. What is important in flowchart? It is a pictorial representation of internal control system. It depicting various elements. Next one, internal control questionnaire. It is a most widely used method for collecting information. Okay, so these all are called techniques of evaluation of internal control system. Next question number 39. Write about statistical sampling. So if you recollect standards on auditing, so what is the standard number of audit sampling? SA 530. So SA 530 is discussing about audit sampling. So it means whenever auditor wants to verify transactions of particular business entity, he can't verify all transactions. For example, you are the auditor of some sole proprietor. So in a year, I think in last year there are some 100 transactions. Maybe you can verify all 100 transactions. If you are auditor of some partnership firm, there are some 1000 transactions. Maybe you can verify all 1000 transactions with the help of your audit assistants or optical clerks. Now you are auditor of some Reliance Industries Limited. So there are lakhs of transactions. That is not possible to verify all the transactions within that short span of period. Then what can we do better? The only thing we have is, we have to verify sum of the total transactions. That means out of that 1 lakh transaction, randomly we will select some 1000 to 1500 or 2000 transactions, depend upon risk. We will verify those 2000 or 1500 transactions. If everything is correct, then we can form a conclusion that everything is correct, true and fair. If there may be, I think out of 2000 transactions, if there are some mistakes in 700, 800 transactions, then you will increase your sample level. So this kind of verification, nothing but verification of some number of transactions or not all transactions, is called sampling. So it is discussed under SA 530. Why auditors choose sampling instead of going for verification of entire population? It is not easy to verify all the transactions in a short span of period, and sometimes it is waste of time as well. No need to verify all the transactions if you are clever. Come on. So this approach is more scientific, does not depend on auditor personal judgment. It includes following: random sampling, systematic sampling, monetary sampling, multi-stage sampling. These 4 are methods of statistical sampling. First one, random sampling. If you observe, the name itself indicates or explaining us, we will select the items in a population randomly. Sir, what is population? Population is called total transaction, whatever we are going to verify. We can call units in the population as a units or items or sampling units, no problem. Come on. In this method of sampling, each item of population or within a given group has known chance of selection. That means each and every unit has equal chance of selection. For example, generally, for example, in our regular classes, some questionnaire concept is there, no? That means faculty will ask you questions on each and every class at the starting of period, correct? So, for example, today one chapter is completed. For example, we completed a company audit. So tomorrow, I told you already, I will ask questions tomorrow morning, at least for 5 persons. Then tell me who are those 5 persons, even I don't know. I'll select out of 100, 5 people randomly. Then what will happen? Everybody will feel that sir will ask questions to me only. Then all of you will prepare. That means every student has a chance, to get answered. Every student has a chance to be answered or to get a question. Here also same. Random sampling means every unit in the population has a chance of selection. Just like this particular example. Every student has a chance to get that question. That is called random sampling. Or if I say directly, I will ask questions only to boys. That means girls are not covered. That means girls has no chance to get a question. Or vice versa. If I say I will ask questions only to the girls, then boys will not get a chance of question. If everybody has an equal chance of selection, then that is called random sampling. Again, this random sampling, it's 2 types. We can divide into 2 types. What are those 2 types? First one, simple random sampling. Second one, stratified sampling. Simple random sampling means each unit should get equal chance. Each unit of the population should get equal chance. That is called simple random sampling. Here, selection is normally done either by choosing a random number manually from a random number table or allowing a computer program to select a random number. For example, there are 100 students are there. I have to select some 10 students. How can I select? Either I may ask, for example, a roll number 5, 6, 8, 15, 22, 34, 56. I may pick like this, or else I may use computer program, select some 10 numbers out of 100. This is called simple random sampling. Either manually I may select or else by using computer technique. However, this method is essentially requires the population units to be necessarily homogeneous or similar in nature. Very super point. That means if you want to apply simple random sampling, definitely all the units in the population should be homogeneous. Homogeneous means should be similar in nature. That means all the students in the classroom should be related to CMA Inter Group 2 only. So 100 students are in the classroom, but 70 students belongs to CMA Inter Group 2, 30 students are belongs to Group 1. Then if I ask any question from company audit, how those 30 persons will answer those questions if I select one person from those 30 persons? Though it is not possible. So if you want to choose this simple random sampling, definitely you should select all items in those population should be homogeneous. Homogeneous means similar in nature. All students should be equal. With the equal means not in terms of result. Equal means they should be all in CM Inter Group 2 only. Okay? Yeah. This is called simple random. Next one, stratified random. So this method requires given heterogeneous population means they are not all people belongs to group 2. First we have to divide entire students into group 1 and group 2. This group 1 box, group 2 box are called stratum. Stratum means subunits or subpopulation. Out of this I will select some persons. For example, I think in our batch some 100 people are there. Out of 100, group 1 students are there, group 2 students are there. I am selecting 15 persons out of those 100 persons for a particular exam or particular test, whatever it is. Then how can I select 15 out of 100? First of all, I have to divide entire population into two categories. Category number 1 is group 1, category 2 is group 2. Then I will select 5 members from group 1, 5 members from group 2. This is called stratified sampling. Stratified sampling is it means we have to divide firstly total populations into subpopulations. This is technically called as stratum. Then selecting equal or unequal portion of items from each group to form a sample. So what is the difference between simple random and stratified random? Simple random means each unit in population has a equal chance of selection. Coming to stratified random sampling, in stratified random sampling we can't say each unit has a equal chance of selection. Why? Because we are firstly dividing entire population into subcategories or subpopulations. They are technically called as stratum. Out of the stratum, I will select some number of units for my sampling purpose. If you observe total simple random and stratified sampling, both are looks like a same, but they are not same. It covers under random sampling. So second category, systematic or interval sampling. So listen, so systematic and interval sampling. So very easy, again same, I have to select 10 students out of 100 students. How to select? If I select randomly, that is called simple random. If I divide into group 1 and group 2, that is called stratified sampling. The third one is, or second main head is systematic or interval sampling. See, in this method what happened, I will select firstly roll number 10. After that I will add 10 to the again this 10. That means I have to select 10, 20, 30, 40, 50, 60, 70, 80, 90, 100. So this is called systematic or interval sampling. That means I have to pick the first unit on a random basis. From that I will add the same figure to that number. Then I will get total 10 people. So third one, monetary unit sampling. So it consists of, actually if you observe simple random or stratified random or systematic interval sampling, it is focusing on numbers, not on amounts. But if you select the sample based upon monetary unit, that is called monetary unit sampling. Last one, multi-stage sampling. It is actually, this method is suitable only when data is stored in a places which is more than one place. So where this sampling is suitable and apt for it. Maybe they can test an MCQ from this area, or else they may give 7-mark question. Just I'll repeat this entire content. Listen. So our question is, you have to discuss about statistical sampling. It consists of mainly 4 types. The first one is simple random sampling. Second one, systematic or interval sampling. Third one, monetary unit sampling. Fourth one, multi-stage sampling. Again, random is divided into 2 categories: simple random, stratified sampling. Again, that is all about question number 39. Let's move on to next question. That is question number 40. Very important or interested question for the paper setter. They are asking this question for number of attempts. If you open recent attempt also, they have given this question for 7 marks. So come on, write a short note on benefits offered by the joint audit. Nothing but they are asking advantages of joint audit. I think you know standard number SCA 299 is discussing about joint auditor. Already I told you standard numbers are damn important for MCQ. They are asking at least 2 out of 15 MCQs. I think you know, just I want to revise the total standard numbers. SCA 200 objective of auditor, 210 agreeing terms of audit engagement, 220 quality control, 230 documentation, 240 fraud, 250 consideration of laws and regulation, 260 and 265 TCWG, 299 joint audit, 300 planning, 315 identifying and assessing risk of material misstatement, 320 materiality, 330 evaluation of misstatements. Coming to 400 series, 402 service organization, and coming to 500 series, 500 audit evidence, and 501 evidence in selected items, and 505 external confirmation, 510 initial audit engagement, 520 analytical procedure, 530 sampling, 540 accounting estimates, 550 related parties, 560 subsequent events, 570 going concern, 580 return representation, 600 using the work of another auditor, 610 internal auditor, 620 expert. All these standards are important. One more series is there, 700. 700 is forming an opinion, 701 key audit matter, 705 modification, 706 emphasis of matter paragraph, 710 comparative information, 720 other information. Okay? Yeah. So now this question is about advantages of joint audit. So that means, what is the meaning of joint audit? First of all, joint audit means two or more people are conducting audit for a single entity. Normally, auditor is a single person or a single entity. But two or more people are verifying or auditing a single entity. That is called joint audit. That means, what you call EY and Deloitte, both are auditing some Reliance Industries Limited, then Deloitte and EY are called joint auditors. Whenever two auditors verifying particular business entities' financial statements, definitely there may be some advantages. First and foremost advantage is sharing of expertise. Definitely they can exchange or share their experience while conducting the audit. What is the net result? Definitely it will impact the audit. Second one, advantage of mutual consultation. Nothing but synergy benefit. Whenever two people are joining together, definitely there will be some synergy benefit. Number three, lower workload. Obviously, to verify entire content by one person is more difficulty than verified by the two persons. They can share their work burden. Number four, better quality of performance. Obviously, quality will increases. Number five, improved service to the client. Definitely, a client will get the best service because two persons are verifying it. He is very lucky. Next one, displacement of the auditor of the company often obviated. Next one, lower staff cost. Next one, lower cost to carry out the work. Actually, I don't agree with this point. Why? Because whenever two auditors are there, they'll expect more fees. So how can you say lower cost? That is not acceptable in my perspective. Last one, a sense of healthy competition towards better performance. Obviously, whenever two persons are in the same sector, definitely there may be some kind of disturbances over there. If they are in a good, healthy mood, then it will be okay. Otherwise, it will be more difficulty. So, these points are enough for writing advantages of joint audit. They may ask like pros and cons of joint audit or benefits or advantages. Answer is same. Okay, you can write on your own words, no problem at all. But important words, sharing of expertise and low workload, better quality, improved service to the clients. You can write all these points. Yes? Yeah. Okay. Question number 41. So this question is from statutory audit or company audit chapter. I think you know in auditing part, important chapters are statutory audit and cost audit and secretarial audit. So out of the statutory audit, this is question number 41. This question is about what are the disqualifications of auditor. I think you know the section number 141 subsection 3 consists of disqualifications of auditor. So that means these below mentioned persons are not qualified to appoint as an auditor. Firstly, I think you know what is the meaning of auditor. Auditor means the person who is a chartered accountant and holding certificate of practice. Yeah, but even though he is a chartered accountant and he is holding certificate of practice, if he is covered under the below categories, he can't appoint as an auditor. Let's see who are they. First one, body corporates. Already I highlighted those words in red color.
body corporates are not eligible to appoint as an auditor. Already I told you in our regular sessions, auditor may be individual, nothing but proprietor or else a firm. An LLP can't appoint as an auditor, or else, LLP is an eligible, but body corporate is not an eligible. Body corporate means like a companies. Companies are not eligible for appoint as an auditor. Second one, an officer or employee of the company. Yeah, let me give me an example here. For example, yeah, you know myself, Varma, I'm working as a faculty member for BCCA. Even though I'm a chartered accountant, I'm holding certificate of practice, I can't appoint as an auditor of a BCCA limited or private limited. Why? Because if I appoint as an auditor, what will happen? If I appoint as an auditor, definitely I will give what you call unqualified or unmodified opinion or nothing, but I will give positive opinion only. Even though there are some mistakes in financial statements, even though they are material misstatement, maybe I will give positive opinion only because I'm just an employee of BCCA limited. There may be some kind of positive opinion on my institute, or else I may be influenced. So definitely what happened, I will give positive opinion, so users will get affected, shareholders will get affected. That is the reason. So generally, officer or employee cannot be appointed as an auditor. Sir, employee is okay. What is the meaning of officer? See, as of now, Varma is an employee of BCCA limited. Maybe in future, I may be appointed as an administration head. In that case, I will be called as an officer, even though I am not eligible for appointed as an auditor. That means if Varma is an employee of that means faculty of the BCCA, or else Varma is an admin staff of BCCA, these two persons are not eligible for appoint as an auditor. Number 3, a person who is a partner or in employment of officer or employee. That means I am not eligible. That means because Varma is an employee of BCCA, Varma is not eligible for appoint as an auditor. Sir, now actually in my firm there is my partner named Ramesh. Can he appoint as an auditor of BCCA limited? No. So even though Ramesh is not an employee of this BCCA and he is not an officer of the BCCA, even though Ramesh is disqualified. Sir, why Ramesh is disqualified, sir? Even though Ramesh is not employee, but he can be influenced through Varma by BCCA. So definitely BCCA can influence Ramesh through me. There may be chance of giving positive opinion only. So that is the reason Ramesh is disqualified. Sir, one more person is there. His name is Vinay. He is my employee. Can he appoint as an auditor? Obviously no. That means Varma is disqualified because he is an employee or officer of the BCCA. Not only Varma, Varma's partner or Varma's employee, both are also disqualified. So our auditor always should be independent. Independent. Either it is financially and non-financially. The thing personally also. If he is dependent, what happened? Definitely he will not give correct opinion or correct report. Point number D, either person or relative or partner holding any security or interest in the company, either holding company or subsidiary company or associate company or subsidiary of holding company. I assume that you know the meanings of subsidiary company, holding company, associate company, subsidiary of holding company. That is basic assumption. Okay. So if you are your partner or your relative holding any security in any company, you are not eligible. Second one, and indebted means you have to pay, you owe to them. So you owe to either company or holding company or subsidiary company or associate company. Again you are disqualified. Number 3, has given guarantee for any security. If you have given any guarantee, then you are also disqualified. You or your relative or your partner, guarantee value 1 lakh, security value 1 lakh, indebtedness value 5 lakhs. Next one, person either directly or indirectly has a business relationship with a company or subsidiary or associate or holding or subsidiary of holding. For example, Varma is not a faculty member of BCCA, but I am having some relationship, business relationship with BCCA. For example, I am supplying food to the BCCA hostel students. So that means there is some business relationship with BCCA and Varma in between both of us. So what happened? Definitely, even though if I am CA and COP, I can't appoint as an auditor of BCCA. Why? Because definitely I can be influenced because there is some relationship, financial relationship that is more important for me. Then definitely I may not give correct opinion on it. So definitely users will get affected. Or else person whose relative is a director or KMP. So, for example, my relative is a director or KMP, then also I am not eligible to do appoint as an auditor. Next one, a person who is convicted by the court of an offense which involving fraud and 10 years not yet elapsed. For example, you are an auditor, you are a qualified CA plus you are holding COP and you are auditor definitely. But recently, because of one fraud, you are convicted for that offense and 10 years is not yet completed, then you are also disqualified for any company. Last one, a person directly or indirectly renders any services led in section number 144. There are some services in section number 144 which you should not provide to any company, holding company, subsidiary company. Sir, what are 144 section? That is not important. You can go to our BCCA material, that will be there. Okay. So these all are disqualifications for an auditor. Next, come to question number 42. Discuss the provisions under section number 139 subsection 7. So generally in auditing subject, section numbers are little bit important, especially in company audit and cost audit and CS audit. For remaining chapters you can ignore. Of course there is no section numbers apart from these 3 chapters, so you have to just focus on it. So actually, how a company appoint an auditor, in fact, there are different types of auditors are there. So that is called first auditor and subsequent auditor. First auditor means who is appointing for the first time after incorporation of the company. He is called first auditor. So again, it is depend upon how to appoint first auditor. It is depend upon whether it is a government company or non-government company. Again, I am taking assumption that you know the meaning of government company and non-government company. If you are appointing first auditor, if it is a other than government company, that means non-government company, that section number is 139 subsection 6. 139 subsection 6 is dealing with the appointment of first auditor other than government company. It must be appointed by the board of directors within 30 days from the date of registration. Whenever company is registered, within 30 days they should appoint a first auditor of a company. They should do. Who is responsible for it? Board of directors. Sir, actually we incorporated a company. So I think we incorporated a company on 1st Jan. So how many days we have? 30 days. That means up to 31st Jan, BOD is responsible to appoint an auditor, first auditor. Sir, they failed to appoint. That means directors can't appoint directors for the first auditors for the company. Then what happens, sir? Then what is going to happen? Then this power will be transferred to members. Members means shareholders. Then they have to appoint within 90 days at an EGM. EGM stands for Extraordinary General Meeting. Number 3, sir, even though first auditor is appointed by the board of directors or else members, our term is always up to conclusion of first AGM. After first AGM concluded, he should leave the office.
Second one, no sir, this is a government company, who should appoint? Remember section number 139 subsection 7. Subsection 6 is discussing about other than government company. 7 is discussing about government company. Always remember, my dear students, in case of government company, for audit things, there is a head called COG. COG means, I think you know, Comptroller and Auditor General. He is the boss of all government companies with respect to audit. So here also, because he is superior for the government company, first auditor of a government company shall be appointed by the COG, or you can call him as a C&AG, within 60 days from the date of registration. For other than government company, we have given 30 days. For government company, we have given 60 days. Because for government company, responsible persons are directors. Directors are solely dedicated to one company, but COG has to take care of all government companies. So that is not that much easy to appoint an auditor within 30 days. So we have given double of the time, so 60 days. Sir, no sir, even though 60 days is there, COG filed, then what to do? BOD will appoint within next 30 days. Sir, BOD also fails, sir, then it will be again transferred to members within 60 days at an EGM. So what is the term of auditor? So same as other than government company, term of auditor is till the conclusion of first AGM. Once first AGM is concluded, he should leave his office. So this is the provisions about first auditor with respect to other than government company and government company, nothing but 139 subsection 6 and subsection 7. So next concept is subsequent auditor, section numbers subsection 1 and subsection 5. 139 subsection 1 is discussing about subsequent auditor other than government company. 5 is discussing about subsequent auditor government company. Other than government company, sir, who has to appoint, sir? For first auditor, responsibility is with directors, then be transferred to members. But once first auditor has gone or leave the office, then responsibility to appoint subsequent auditor is with always with the company. Company means shareholders at first AGM. In fact, do you know one thing? First AGM, what happened? In first AGM only, the first auditor should leave his office. At the same meeting, subsequent auditor will join or will be appointed. So at first AGM. So what is the term of subsequent auditor, sir? Once subsequent auditor is appointed, he will be continue from the ending of first AGM to till the conclusion of sixth AGM. That means here term is almost 5 years, unlike first auditor. Prior to appointment, before appointment, auditor should give written consent and certificate of compliance to the company. At the same time, company should give ADT1 to the ROC. So last one, 139 subsection 5. So last one, appointment of subsequent auditor for a government company, section number 139 subsection 5. Here also, because that is a government company, it should be appointed by the COG. COG means Comptroller and Auditor General. When should we appoint? Within 180 days from the start of financial year. So term of subsequent auditor equals to till conclusion of AGM. Okay, so this is all about the appointment of auditors. They are asking subsection 7. Subsection 7 means what? 6, 7, 1, 5. Subsection 6 is discussing appointment of auditor for other than government company. 7 is a government company. I think just now we discussed C&AG, Comptroller and Auditor General, 60 days. If he fails, directors next 30. If they fails, members 60.
removal section number 140 subsection 1. So whenever a company wants to remove any auditor, that is not that much easy. They have to make an application to file an application to central government with form ADT 2. So whenever central government approved, you can remove your auditor, then within 30 days they should conduct a board meeting and they have to pass board resolution. Once board resolution has been passed, and they should conduct a general meeting within 60 days. And we at the same time we have to give ROBH. So to remove auditor, section number 140 subsection 1 applies, but it is not that much easy. To remove, I will show you. (140) subsection 1, subsection to resignation. Yes, here it is. You can see. Firstly, we should pass board resolution within 30 days. We should make an application to central government, form AD2 plus fee. It should be approved by the central government. Once approved within 60 days, we should pass special resolution. So that means 3 resolutions are required: board resolution and central government approval and special resolution. Without these 3 approvals, we can't remove any auditor. That is the power of auditor. This is all about question number 42. And question number 43, discuss the functions of audit committee. So I think you know the section number 177 of Companies Act 2013 has discussing about audit committee. In audit committee, you should have minimum 3 directors out of members. Majority should be independent directors. So they have given some functions and powers. Very, very important question. Let's see what are the functions. For appointment and fixation of the remuneration of auditor. So who has to appoint? That's what we covered in 139, 1, 5, 6 and 7. But how much remuneration should we pay? All this which should be decided by the audit committee. And second one, inspection of financial statements. So definitely, I think you know the meaning of financial statements. It means it covers, in fact, balance sheet, P&L, cash flow, notes, statement of changes in equity. So whenever the financial statements has been prepared by the entity, so audit committee can inspect it. It has the right to inspect. Number 3, scrutiny of intercorporate loans and investments. So scrutiny means verifying. Verifying what? Intercorporate means within the entity or holding subsidiary, such kind of things. Next one, valuation of assets of the company. Whenever it is required, they can value the assets of the company. And assessment of internal financial control and risk management system. Assessment of the use of funds and assessment of an related party transaction. These all are the functions of the audit committee, and powers are also there. Audit committee has power to call for comments of the auditor about the internal control system. Audit committee may ask for auditor, my dear auditor, please give me what are your comments on our internal control system. Tell me if there is anything wrong, we are ready to rectify it. Number 2, before submission of report to the board, audit committee have the power to review financial statement. I think you know, as per AS 10, Ind AS 10 and AS 10, events after reporting period. Events after reporting period, definitely it should be approved by the board of directors. Before approval of directors, so firstly those will be reviewed by the audit committee. Last one, powers to discuss any issue with the statutory and internal auditor and management of the company, matters related to financial statements. So audit committee is like a bridge between auditor and management of the entity. So this is the functions and power of audit committee. Very, very important question. Next one, question number 44. What are the procedure for appointing a cost auditor in a company? So we covered till now statutory audit.
In statutory audit, we covered 139 subsection 6, 7, 1 and 5. Now we are discussing about cost audit. How to appoint cost auditor? So listen, the cost auditor is to be appointed by the board of directors on the recommendations of the audit committee. Here also audit committee plays a crucial role, where the company is required to have an audit committee. The cost auditor proposed to be appointed required to give a letter of consent. So definitely who is proposed to be appointed, he should give letter of consent. That means I'm ready to appoint as an auditor. There is no pressure on me. I'm giving my consent. Number 3, the company shall inform the cost auditor concerned of his or its appointment and file a notice of appointment with the central government within 30 days or 180 days from the beginning of year, whichever is earlier. Form number CRA 2. I think you know already I covered this point in my marathon as well. In costing, there is one MCQ. They are asking in each and every attempt. Last 4 attempts they have asked this question. That is called forms CRA1, CRA2, CRA3, CRA4. CRA means cost record and audit. CRA1 is related to maintenance of cost record. CRA2 is discussing about, so company has to intimate to the central government that we appointed so and so as a cost auditor. That is called intimation of appointment. CRA3 is discussing about cost audit report. CRA4 is filing of that, submission of that audit report or filing of that report with the central government. Same as statutory audit, if there is any casual vacancy, it should be filled by the directors within 30 days. Remember, for casual vacancy, always responsibility is with the board of directors, even though that is a company auditor, nothing but statutory auditor or cost auditor or secretarial auditor, this provision is same. So whenever there is a casual vacancy, it should be filled up by the board of directors within 30 days from the vacancy. And question number 45, write short note on auditor's duty regarding interim dividend and audit of PPE. So these 2 questions has been picked up from audit of various items of financial statements. So whenever you are appointed as an auditor of a company, definitely you have to verify all balance sheet items, P&L items, all those items correct. So out of this they'll ask something, how will you verify dividend, how will you verify PPE? You have to just write how you are going to verify. Let's see how to write. In connection with the payment of dividend or interim. What is the meaning of interim dividend, by the way? Dividends are 2 types, final dividend, interim dividend. Final dividend means they will give you dividend at the end of year. Interim dividend means they will give you in between the year. So the auditor must consider the following points. Let's see what are those points. Point number 1. The auditor should examine the articles of association of the company to ascertain whether payment of interim dividend is permitted by the articles or not. So before, whenever you are going to check interim dividend, you should check one point very clearly. What is that point? You have to check firstly articles of association. I think you know that there are 2 important documents in every company. Those are MOA and AOA. MOA stands for Memorandum of Association. AOA stands for Articles of Association. Whenever you are verifying we are verifying interim dividend, you should check once articles of association. Sir, what should I check, sir? You have to check in AOA, is there any provision with respect to interim dividend or not? You have to verify it. Number 2, the auditor should also examine the minute book of directors meeting to verify the resolution to approve interim dividend. Sir, this is all of common process. Whenever they want to give dividend, it should be approved by the AOA. You have to check. Again, whenever they are giving to dividend, they have to first pass board meeting. You have to check that meanings, what happened in that meeting. Number 3,
The amount of interim dividend shall be deposited in a scheduled bank in a separate bank account within 5 days from the date of declaration. Declaration means whenever you declaration of such dividend. This is also procedure. So every company, whenever they declare dividend, within a 5 days from the declaration date, they have to deposit such amount in a scheduled bank. It is a separate account dedicated to dividend payments. Next one, based on the particulars of dividend register, auditor must verify whether such dividend warrants have been issued to the rightful owners. So definitely we have to give warrant. That means you are responsible to take dividends. You can take it. That is called warrant or ECS. ECS means electronic mode service. Next one, auditor should verify the dividend register. There they will clearly write who are the persons, how is the dividend amount, whether given or not. So these points are enough when they are asking question from interim dividend. What is the summary? We have to check articles of association, we have to check minutes book, and we have to check whether such amount has been deposited in a separate scheduled bank or not. That should be within 5 days, and we have to check dividend register also. Next one, audit of PPE, plant, property and equipment. An auditor should follow the procedure mentioned below while performing audit. Let's see what is the procedure. Auditor must verify physical verification of assets. Definitely, whenever any auditor is appointed, definitely should first verify what? Physical verification. At the same time, along with what? Fixed assets register. Same thing covered in chapter number 11 as well. And he shall specifically ensure that assets that are not in the working condition have been accounted for as a deletion. Sometimes what happened, one asset is there that is not in a usable condition, but still you are showing in your assets. That is not correct. Definitely should delete from your books as well. C, he shall verify the PPE schedule maintained by the management and tally the closing balances of the entity's books of accounts. Schedule means asset class wise. Okay, like a PPE, intangible assets, long term, current assets. This is called schedule, class basis. He should also check arithmetical accuracy. Arithmetical accuracy means calculation part, whether they calculated correctly cost minus depreciation or not. Last one, he should also verify whether appropriate internal process and procedure like inviting competitive quotations, floating. So whenever you are purchasing an asset, definitely you should not purchase just like that. You have to first take quotations from the different suppliers and you have to choose which is better one. So these points are enough for verifying PPE. Sir, my dear students, remember one thing. Whenever they are asking question from this chapter, they may ask audit of PPE or inventory or dividend. You can write it on your own, subject to just basic knowledge is required on that chapter. Okay. And question number 46. What are the objectives of verification of assets and liabilities? Why should I verify assets and liabilities? What is my objective to verify assets and liabilities? Let's see. Verification of assets and liabilities is done with the following objects. Let's see what are those objects. Number one, to know whether the balance sheet exhibits a true and fair view. That is very, very important. So the main purpose of verifying assets and liabilities is whether my balance sheet is showing true and fair view or not. State of affairs means nothing but balance sheet position only. I think you know, statement of financial position is nothing but P&L account. Financial performance or efforts is nothing but balance sheet. At the same time, to find out whether assets were in existence. So you are showing assets in your books of accounts. Just I want to know whether really are there or not. Does really in existence or not. To verify it, I have to verify my assets and liabilities. Number 3, to find out ownership and title of the asset. Who is real owner? What is the title of that asset? Is it leased asset or is it owned asset? Who is owner? We have to check it out. To show correct valuation of assets and liabilities. You are showing your asset value as 10 lakh, but in reality that may be 2 or 3 lakhs. To know this correct value, we should value our assets and liabilities. Next one, to verify arithmetical accuracy of books of accounts. So definitely already I told you, we have to check mathematical calculation part. Is it correct or not? Whether we correctly reduce the depreciation or not. To ensure the assets have been recorded properly. Whether all assets are recorded or not. Is it properly or not? Next one, to detect frauds and errors. Is there any frauds or errors are there? Sir, what is the difference between fraud and error? Fraud is an intentional misstatement. Error is an unintentional misstatement. So both consists of misstatement, nothing but mistake. If it is intentional, that is fraud. If it is unintentional, that is error. Next one, to find out whether there is an adequate internal control regarding acquisition, utilization and disposal of assets. Whether there is any proper controls or there while acquiring or utilizing at the time of disposal of assets. Just whether they are scrapping it without any authorization or whether they are just purchasing without any quotations, and how they are utilizing it, we can find out only by valuing assets and liabilities. So these 8 points are required or are objectives while you are verifying our assets and liabilities. Next, come to question number 47. As an auditor of company, how will you audit of reissue of forfeited shares? Already we covered the same topic in corporate accounting part. Chapter name, Forfeiture of shares. Do you remember forfeiture of shares concept? What is the forfeiture of shares exactly? Forfeiture of shares means cancellation of shares. When generally company will forfeit the shares, obviously, whenever shareholder fails to pay his call money, that might be allotment money or first call or second call or final call. Whenever shareholder fails to pay call money, definitely company has the right to forfeit the shares. I think you know in corporate accounting we had a beautiful discussion with respect to forfeiture of shares. So whenever company is forfeited your shares, for example, I'm shareholder, paid application money, allotment money, first call money, but we are unable to pay final call money. Out of 10 rupees, we have paid 8 rupees, but still 2 rupees is unpaid. So whenever you are unable to pay your call money, what happened? Definitely company will forfeit the shares. Generally, the first doubt which students will get, sir, okay, share is forfeited, that is fine. What about my 8 rupees? What about paid up value? Whether I will get refund that 8 rupees? No, obviously you will not get any amount of refund. You can't even get single rupee. So the total 8 rupees will be the profit to the company. That is a capital profit, not a revenue profit. Okay. So of course you know where we discussed whenever company is forfeited your shares, they can reissue their shares to someone else. Normally, as per section number 53 of Companies Act 2013, it says issue of shares at discount is prohibited. But here what happened? Can actually a company, if there is a forfeiture of shares, company can reissue those forfeited shares at premium or par at a discount also. Here section number 53 is not applicable. So same thing they have asked in audit subject. If you are auditor, okay, let's see how to verify reissue of forfeited shares. Already we know in corporate accounting part forfeited share, we have to verify this forfeited shares. Let's see how to verify it. So the auditor should ascertain the board of directors has authority under articles of association. Same as previous question. Definitely we have to verify first thing AOA permission. I think you know what is the meaning of AOA and MOA. What is AOA stands for? Articles of Association. Second one, we have to watch. Already I have covered in my marathon part. What is the meaning of watching and verification? Watching means verification of anything with supporting documents. So watch the amounts collected from the persons to whom the shares have been allotted and verify the entries recorded. So we have to verify before reissuing. Number 3, verify that computation of surplus amount arising on reissue shares. I think you know in corporate accounting part, whenever we reissued shares, any surplus on it, we should transfer it to capital reserve, which is a profit to the company. That too, that is a capital profit, not a revenue profit. So we should transfer it to capital reserve. Point number 4. Where partly paid shares are forfeited, I think you know how to calculate it. Section number 53 is not applicable here, but we have to consider whenever you are reissuing your shares, but you can issue a discount, no problem, but the discount shall not exceed amount paid by the original shareholder. That is important point. This is all about question number 47. In fact, very easy question. What do we check? We have to check whether it is permitted by the AOA or not. Second one, and we have to check register for entries. Third one, we have to check how they are calculated surplus, nothing but profit. That's what we should transfer to capital reserve. Fourth one, whenever you are issuing partly paid shares, you have to focus more on it because there is a little bit difficulty or complication is there. Okay. Again, I told you, whenever they are asking like interim dividend, stock, PP or this kind of question, you can do it by your own while with your knowledge of corporate accounting and accounting part. Okay. So come to question number 48. This question is from audit report. So they are asking what are the basic elements of audit report. I think this question also I covered in my marathon as well. Again, I am covering here in Super 50. Listen. So, basic elements of audit report covers, it firstly consists of title. Title means heading. Second one, addressee. Third one, opening or introductory paragraph. Next one, opinion, basis for opinion, date, place, signature. You have to remember what are those, tell me. Title, addressee, opinion, basis for opinion, date, place, signature. In between you have to write one more thing, responsibility of the auditor, responsibility of the management also. You can write title, addressee, opinion, basis for opinion, auditor responsibility, management responsibility, date, signature, place. Title means, so we have to show directly, we have to write the title very clearly. That is, this is an independent auditor's report. Second one, addressee. Addressee means for whom you are giving your report. That might be members of company shareholders. Then what is your opinion? Is it positive or negative? Nothing but is it qualified or unqualified? Second, next one, basis for opinion. That means we followed standards on auditing. Next one, what are the responsibility of the auditor? What is the responsibility? We have to collect sufficient and appropriate audit evidence. We have to check whether financial statements has been showing true and fair view or not. And what are the management responsibilities? They are responsible for preparation of financial statement. They have to cooperate to the auditor. And last one, date of the report, when you are signing and where you are signing, and signature of the auditor. So especially remember the side headings at least. What are those? Tell me. Title, addressee, opinion, basis for opinion, auditor responsibility, management responsibility, date, signature, place. Done. Come to question number 49. write short note on audit of hospital. So this 49 and 50, these two questions are from audit of different types of undertaking. So this chapter also very easy. Whenever they are asking a question from this chapter, audit of different types of undertakings, so very easy question. Every time they are asking for at least 7 marks, and one MCQ is also for 2 marks. 7 plus 2, 9 marks. So the question may be covered from topic 1, educational institution like schools, colleges, universities. Second one, healthcare organization like hospitals. Third one, hospitality sector, that means restaurants, food and beverages and cinema halls. Number 4, cooperative societies. Number 5, self-governments in India. Number 6, banks. From these 6 areas, they are asking each and every attempt for 7 marks plus 1 MCQ. Total weightage is 9 marks. In my marathon, I have clearly told you, I have given clear points how to answer it. But this is Super 50. I'm just focusing on given questions. So question is, audit of healthcare organization, nothing but hospitals. How to verify audit of hospitals? How to verify it, sir? Firstly, you have to check, you have to understood one point. Whenever any hospital is there, that may be trust or partnership or company. If it is a trust, you should go through the trust deed. If it is a partnership, you have to verify the partnership deed. If it is a company, you should verify MOA and AOA. Then we have to look at some procedure. Let's see. Yeah, understand the constitution. That's what we covered. Constitution means we have to check either trust deed or partnership deed, or else what is the third one? MOA or AOA if it is a company. Second one, assess the internal control system. Third one, consult the minutes book. Fourth one, verify receipt related transaction. Next one, in case of hospital run by the state government or any local authority, we have to verify grants. Grants means whenever we are receiving any benefit from or assistance from the government, we have to verify is it properly utilized or not. So whenever something you are verifying some Gandhi hospital in Hyderabad, you have to verify how much grants received from the Telangana government, how you utilized it. Number 2, watch collections. Watch means verification of anything with supporting documents. Watch collections from patients admitted with the admission register. We have to verify admission register. There we can find out is it correct or genuine or not. Number 3, verify collections from various pathological tests. Pathological tests means like X-rays, blood tests, such kind of things based on counterfiles. Counterfiles means duplicate copies, Xerox, carbon copy copies. And watch the donations based on counterfiles. We have to definitely, whenever a hospital is there, they may get some donations from outsiders. We have to verify it, watch it. In case of hospitals having guest houses, assess based on registers and counterfiles. Next one, interest and dividend should be watched with the investment register. Whenever you are receiving interest or dividend, that means you have invested in somewhere. Otherwise, you will not get interest or dividend. You have to verify it. Next one, verify donations. Already this point is covered. These all are receipts. Fifth one, payments. Tell me what are the payment for hospital, salaries, wages, electricity, purchase of fixed asset, and they may purchase some assets or they may construct asset. So all these you should verify. Like pathological test, nothing but X-ray machine, such kind of things. Pathological tests means like X-rays, blood tests, such kind of things. Okay, scanning machines, all those comes under pathological tests. And verify remuneration of the doctors based upon how many number of times they visited, all those things. We have to verify everything in detail. So we verified receipts in point number 4, payment in point number 5, and the same way verification of assets and liabilities. We have to verify if it is a hospital or any entity. We have to firstly verify physical verification along with fixed assets register. At the same time, we have to verify investments with investments register. Next one, refund of TDS on interest on investment. Verify all outstanding liabilities and verify inventory with stock register. So these all are comes under audit of a hospital sector or healthcare organization. Whenever you are auditing this kind of organization, or whenever question comes, you can write it on your own. No need to remember all these points if you are conceptually strengthened or strong. Okay. So last question, audit of an educational institution. Same here also. First of all, let's see what is the answer in this question. Study the charter or trust deed. That's what we covered. Verify internal control system, government grants, capital and revenue, staff payments, physical verification of PPE, depreciation. And next one, short noted on audit of educational institution. That means whenever you are verifying educational institutions, that might be schools, colleges or university, how to verify? Here also same, that may be trust or society or university, you have to understand the constitution and you have to assess the, you can command assess the internal control system, and you have to consult minute book and verify receipt related transactions. What are the receipts for any educational institution? That might be tuition fees, admission fees, hostel fee, scholarship fee, or sometimes donations or grants or other fees. These all are the receipts of any educational institution. What are the payments? Payments may be salaries to the employees, and sometimes maybe conduct some special events like a fest. So we have to verify it, and regular expenses like electricity, telephone, advertisements, such kind of things, and verify purchase of fixed asset and construction of asset, utilization of grants, and cash on deposit refund, all those things. And same as hospital, we have to verify same points here also, verifying audit of assets and liabilities. Everything is same. Okay, so this is all about audit of educational institution and healthcare organization. So with this, total 50 questions has been completed successfully. Okay.